Sorry. All right, check, mic check. 1, 2, 3, 4. Yahoo! Yeah, we're gonna do some prep here. Get everybody prepped up for tomorrow. What's what we're doing here? Check 1, 2. Get right into it, man. We gotta make this quick. Good morning. Good morning. I start to see you guys pop in right now. Good morning. Got a couple quick things got to do here. Gonna do some rate decision prep today. Hang tight here. Let's get right into it. What do I gotta do here? Sort by news. What am I doing here? Missing something here. Missing something. I don't know what I'm missing. Details, customization, members only, monetization. And what else we have here? Good to see you all. Good morning. How's everybody doing out there? Let's get right into it. I don't have. Let me put my camera on for you. Hang tight 1 second here and move some of this over. Get my camera going here. Get rid of the color block. Okay. First of all, good morning to all of you. Thank you for being here today. I'm with you here, but I'm not in stream a lot. I apologize for that. I'm on this huge deadline for Friday. And it requires, let me post this really quick. 1 quick second here. What happens is this is on stream. I'm on stream. I get into the stream and then I'm not paying attention. And these developers are like, "Hey, I got a question." If I don't answer it, it's like 3 hours later. I answer it and then 12 hours later, they get back to me. So if you're wondering why I'm not, the stream is up every day, but if you're wondering why I'm not here, it's because of that. Basically, I have to be available. So I'm going to tell you guys a few things off that right away. I'm likely not going to answer many questions, so that I don't become sidetracked, not because I don't want to answer them, anything like that. It's more about I can't get sidetracked. I have to get back to what I'm doing. So give me 1 quick second here, and I'm going to give you guys a prep for tomorrow and what to expect, that kind of stuff. What the expectations are. Now, I think I've got this on here. We'll take a look at something else too. I think I have a bunch of rate decisions, and we'll chat about those previous rate decisions, what happened during those rate decisions. It's, the thing about rate decisions of late is they've been a benign, no up, no down, just benign. And we'll talk about that today it's important to talk about that today because the market really is tied into, as a matter of fact, right? I bought calls down here, right? I bought calls down here, and they're just grinding me right now. It's kind of funny to watch. I'm sitting in a bunch of calls here, and we're going up, and they're just grinding. Hopefully you're buying in the money calls right now or puts. So if you're trying to go in a direction, whatever direction that is, make sure you're buying those calls or puts in the money, like a strike or two. Do not be buying calls that are 30 deltas, even 20 or 10 deltas on a turnaround. Get them in the money to the upside. Make sure you're in the money deeply. Otherwise, they're just destroying both sides of chains right now. And I got some I actually have some puts for Wednesday already. I've got a ratio spread for Wednesday, and the puts are getting ground down right now. They're all penny puts, but I'm fascinated by the fact that they're grinding them. I'm like, when we were going down, matter of fact, when we were going down this morning, they were grinding them. So I was fascinated by that as well. Just the mechanics of these options right now heading into this rate decision. Now, we should talk about that this morning because there's a we broke about 460, 4,600, and we're now stuck in this 4,600 to 4,650 on the week. I'm going to assume here that people they think it's going to go to, 5,000 this week or 4,800 this week. It's possible. But if we did, the expectation would be that we sell down in a massive way. Pretty big, violent moves down into end of year. So we'll trade it if it happens. But even this rate decision, there's a high probability that they're not going to print either side. My point here is that there's a high probability that just like an ER, that they could, because there's so much interest in this rate hike specifically, that they could just strap this market in, pull it back. You get the downside or upside move, and then what they end up doing is pulling it back up for Friday. So if you're looking for a range for this week, for the rest of this week, let's say it's Tuesday, right? You got Wednesday. We got one more day until I get that big move. But even so, there's a very high probability of failure to the downside and the upside, and that we trade that 4,600 to 4,650 this week. Just be aware of it. That there's a magnet or a pin to this zone here into Friday. Now, if we get a rate hike, we will break through that. That ain't gonna mean shit. We can definitely make a run to the downside if there is an unexpected rate hike. And we can talk about that today too. So we've gone 5 months, coming on 6 months without a went looking for it last night. I'll try to find it, but I think it was from Trader's Almanac, where historically, if we go 5 months without a rate hike, and so this would mean that if he does not give us a rate hike, that is the end of the hiking cycle. Now, I read some bullshit yesterday. I read an article yesterday from some guy that said, well, if they don't raise rates and they promise to hold rates here higher for longer, right, that it buys some time in that Goldilocks zone. They can be saying that to you, but the truth be told, we have not had a hike since July, or I think it was the 28th of July. Don't hold me to that, but I think it was right around the 27th, 28th of July was our last hike, and so that means it's already been front run. Okay, so we've already got some months behind us in that Goldilocks zone, and within that Goldilocks zone as well. About 2 or 3 months before the first rate cut or expected rate cut or whatever, we're normally hitting about 2% inflation by whatever fucking bullshit numbers they're putting out. Unemployment should be ramping at that point as well. And about 2 months before, usually 1 month, 2 months before they expect to actually start to begin to cut rates, you should see a front running for a downside move that back checks wherever we are. So price will matter here is the point that I'm trying to make. We'll talk about that right now. I'll explain that simply for you, okay? And we'll take a look at that right now. So probably gonna hold these fucking calls all day long. That's what I've been doing, is just buying the money calls, hold them all day long, let the grind up happen, and then they sell. I don't know if that works today, but it's been working like a motherfucker. So we'll see what happens today. Find the dip, find the morning low, get some in the money calls, just hold them, let them grind it out all day long. they could possibly grind us sideways and down here today too. We're 1 day away from the rate decision. Now I'm gonna discuss this and explain some of this stuff to you. Okay. I was in a conversation late night last night, and I was talking to a friend last night about, or two friends actually, over the course of yesterday. We were discussing. Let's see if I can put this up on the daily here. I'm not gonna. I think I have this stuff here, but maybe I can bring some of this stuff up. Hold on here. Let me see if I can bring something else up. Hold on. Hang tight 1 second here. And people are going to trade to this. Some of this stuff people are going to trade to, whether it proves right or wrong or not. But we're going to discuss this. And here, we're going to take a look at this real quick. So the first thing to be thinking about here is Wyckoff events. And we have the initial sell down, right? We have the trough. We come above the trough, right? We back test it, and we're off and running, right? People are wondering if that's where we are. These are accumulation Wyckoff models, of course. And then these are the first two. These are the two of the accumulation Wyckoff models. But then we've got some distribution type stuff here. And let's say this was like March of, let's say this was, January of 2022, or even this was January of 2022. This could be January, March 2022, right? And we're coming back up into test these previous highs. This is a big one right here. So retesting these previous highs right here, right? It's important, number one, if you're a bull, that we are able to get the new high, but then we back test this high and continue on. Does that make sense? So we back test and continue on. It's also important that we do not get the new high and then begin to fucking sell right down and have that last leg down to 3,500. And then another issue here would be, how deep does this go? And if we actually fail the new high up here, it could mean real death and destruction to the downside. So this whole area is going to be very important to distribution and accumulation models. Matter of fact, you can see this one here. This is the failure back here, and then we start bloodbathing it down. Okay, and we're looking at that 3,500. Now we're going to switch back over to the trigger screen here. And let me see if I can go to this trigger screen here. And you can kind of see we're back here again, right? We're back here again. We've got the previous high back here. We've got this high back here. This was a failure, right? You remember everybody was calling for the blood down to the downside. That's that Wyckoff distribution model. Didn't happen. And then we're coming back up here to test this right here, right? And the idea here is that this is that previous high, right? How high can we get price on the S&P 500? So whatever back test that we do is either testing this level here, this monthly could be the worst back test, right? But we never come back down to actually test this 3,500 low. And even if we did, that would be the worst of it. Okay? So this is we have high probability, mid probability, very low probability. And this stuff starts to become no probability down here, these lower numbers. I'll show you these later. One of the greatest tricks that the Fed pulled was time on market, right? They had some time where they traded us down. Market believed we're actually doing the work we're supposed to do. And we don't want to have this moment. They don't care if we get this moment. I'm going to be honest with you. Biden, Jerome Powell, they do not care if we trade this. I want to warn you of that. They care if we trade this, but if we don't trade that, so even on a scale of probabilities, they'll say mission accomplished even if we get down to this 3,500. Okay. 3,800, 4,000, like these are all very high probability up here. So they have a pretty good chance if they can get price up here to take care of that. If you see more aggressive Fed Chair Powell, and he's telling you, eat a bag of dicks or whatever, this is way more probable. And this whole sideways market to grind sideways is probable as well. Okay. Now, word of warning here, or not warning, but I want you to know that regardless of how this plays out or what happens or any of that other shit, I want you to know that we will be able to see this if we do. Let's say we do begin to break down below this hourly trigger, we'll be able to see it. You can actually see the breakdown here, the cross of the daily trigger over the weekly trigger. It showed extreme bearishness. We smashed down to the monthly, pulled back up, right? If we were to begin to reject underneath, and the price was begin to reject underneath, and the daily trigger began to follow underneath the monthly trigger, and the weekly began to follow, we could predict that the expected target would be that quarterly trigger. So you shouldn't be panicking here either, is my point. We can see that roll before it happens. We can anticipate that we're trying to target these previous lows and that kind of stuff. So now the greatest trick that heading back to that greatest trick that the Fed ever pulled, we're still pulling up on these low targets, right? This is we had real fear over here in this roll, right, to go down all the way down here. But now, even if we were to go down here, it's not as bad as it was back here in time. So the more time they buy us going up or even sideways with continuation of holding for longer, they're buying themselves time to never come back and see that 3,500 low. These fuckers are pissing me off in this options chain to no fucking end. So at any rate, and you're looking at this low back here. This is the COVID low. You'd really need something big to have this happen, which is possible. We haven't had anything big for a few years. Right around 3 to 5 year mark, we can have an event that'll drive us down very low. So just keep aware in that. But as we approach this, this is definitely behind the scenes. Price will matter here. All this price action and where price is will matter how far we pull back. I can say this simply for you too. When we're trading 4,000, 3,500 is not so unreasonable, is it? But when you begin to trade 4,800, like 4,800, 5,000, and you start talking about wanting to not only trade, the 3,500 seems to be pretty steep, right? Trading 4,800, you're talking about losing 1,000 points. It's a pretty big move to the downside. It's possible. It's just it's rare. And these lower targets become almost absurd. You're going to tell me that we're going to go down 2,000 points or 1,500 points. I squint my eyes and question. And even if we do, is it now down at 2,800 or 3,800 or 3,200, 2,800, 1,600 way back over here? So here you had 1,900, and over here you had 2,560. So 2,618. I think it was 18 over here and 2,600 over here when it began. So think about this right now. If you're a bear, I want you to think about the fact that the door's not shut on you. The door is not shut on you, but the door is shutting on you with that thesis of we'll be back to see 3,500, and we're going to see even lower than that, right? So it's rear view mirror almost now, and price is showing that. We just traded at this point. Just check SPX really quick. Just went back and checked that previous high up there. So my point to you is that we're rear view mirroring a lot of this shit. Even if we roll back, even if we have a rollover because of cutting rates, it's still rear view mirror. I remember in October, I remember in May we talked about crashing farther. I remember in July we talked about that. I remember in October We talked about that crashing lower. And I also remember that I talked with a friend with yesterday that you guys may not remember. There was a mantra on FinTwit that said, I don't care that I didn't buy 3,500 because we're going to see it again. I'll get another chance to buy it. And my point to you was, no, you buy 3,500 now, and if we come back to 3,500, you buy it a second time. Why? Because there's a chance, a better chance, more of a chance of never coming back to it than it is a greater chance that we're going to see 3,500 again. And that door is being closed. That door for that seller out there with 1 million followers telling you they can come back to buy 3,500, they're going to be shut down yet again historically. So if you're a young trader and you've only been trading, I don't know, past 1, 2, 3 years, if you've been trading for 5 or 10 years, been trading for 15 years, you're going to see your third, fourth, or fifth major example of whenever we get those major bloodbaths or not bear markets or crashes that you buy that fucking dip. It's very rare that we go back and see those major lows. So this previous one, 3,500, we've seen it 4 times, maybe 5 or 6 since the 1890s. World War II, the Great Depression, I know for sure, and then 2001 and 2008, 7, 8, 1, 2, 0, 0 through 2. We saw lower lows, but you're talking about major things like world wars, right? Depressions, major fraud in the market. But I agree with you, we have fraud in the market, but they have to see it, right? As we found fraud in the market. Outside of those things, we don't historically go back and check those previous lows. It's just still rear view mirror. Like you'll tag 3,800 or 3,700. We can. It's just a very low probability. And them buying time on this market right now, the past couple of years, is shutting the door on that once again. So just keep that in mind. Keep that in mind as we move forward in this market. Now, I was talking to another friend last night, and we were discussing, or I was on a rant with him. I was on a rant with him about some of this stuff, and I was on a bigger rant with a buddy of mine earlier in the day about Japan and where we are. And this is how it started. Let's go back to we'll come back to this in just a minute here. I want to go on a rant really quick. So we were chatting about Japan and my life and his life. He's an older guy. He's older than me. And this was earlier in the day, in case both of these people are listening. But earlier in the day, I was talking to a guy that's older than me. But I'm older. I'm an older guy. And I've lived through a bunch of these cycles. And I was impacted by this as a child. In 1987, I was a very young child. My father had everything. He had houses. He had rentals. He had businesses. We had everything. We moved out of the city. We lived up the country. We had an in-ground pool. We had acres of land. We had housekeepers and people that took care of our yard, and we had everything. We were upper middle class, and he lost it all. He over-leveraged himself. 1987 crash came in, and he was holding his dick, and he lost everything. I remember my mother. I was sitting in my house, and my father and mother had just replaced everything in our house with new shit. And I remember my dog had a dog house up on the hill, on a side yard that we had. And my dad walked my mom outside, and my mom collapsed crying on her knees, fell down on her knees. I knew something was wrong. And my dad, overnight, not overnight, but the course of a week or two, lost everything. So that was my first introduction to what is the stock market, what is my dad, my mom so upset about. And they lost everything. They thought they were going to be able to keep some stuff too, and they took it all. At the end result, when it was all said and done, attorneys promised them they could keep their house and keep I think it was one nice car that they had. They took every fucking thing they had. Okay? What's the meaning of that? The point is they were washing out people in that crash, right? They were washing out people, even if they had good debt. It was still bad debt. They were over leveraged, too much debt in case something went wrong. My dad was wealthy, man. My dad's wealthy to this day, but he got washed out, and it was brutal at that time. Now, at that time, hamburgers. We talk about hamburgers around here, and you've been following me for years. We talk about eggs, right? We talk about Mary the Landscaper. I talked to you about how these companies, these produce, not just the producers, but like your egg maker, they have a plan for 10, 15 years until they can reprice, right? That once they latch onto that repricing, they don't let go of it, no matter what the Fed's telling you or anyone else. So if they can get in there and raise those prices, they will, and then give you, once you accept that price, they'll go back and give you discounts and stuff. But they're gonna raise prices, like burgers, hamburgers, cheeseburgers. They don't fucking come down in price. You know what I'm saying? No matter what the Fed's telling you, even if we get back to a year-over-year rate of inflation of 2.2%, inflation's still fucking going up every year. And we know this is going to happen. They are shocking you right now or you're being shocked with prices right now that will not ever fucking come back down. And you're also seeing wages coming up. You're seeing airline pilots, UPS drivers, FedEx, unions across the U.S. renegotiating for an entry-level worker being paid in 4 to 5 years afterwards $150,000 in pay and benefits. That means that your McDonald's worker at some point will have to come up. In the meantime, some companies are going to squeeze that worker until they're forced into it, right? And they're also going to raise prices to squeeze the people that can pay it, right? And this week I was looking at apartment and house rentals around the country. $2,000 fucking dollars in a shithole. Oh, not a shithole, but a shithole, like what I consider middle America or suburban America. If you know 2 and 3, like a three bedroom house with 2 baths, if they're about $2,000 where you live in like middle America. If you want to live in anywhere that is prized, like LA, New York, Park City, fucking Miami, wherever, you're talking $5-6 entry to $15,000 a month. So if I was to move to Vail right now, I'd probably entry level about $5,000. That's $60,000 a year pre-tax. Okay? Now we're talking what's middle class. If I was to rent a 3-bedroom there, right, 50, 60,000 a year, that means I gotta make what, 70 or 80 just to pay that, right? Let's say that's 25% of my income. That's closer to $400,000. So you've got companies and people and landlords and everybody out there that are pricing in you being forced to make more money to pay more. 10% of adults in the United States of America, 9.75%, are millionaires. That's a fucking lot. 10 out of every 100 is a millionaire. Wages are going to come up. Prices are going to come up. This is all being priced in this new cycle that's happening right now. And Jerome is on the hot seat on this, right? Even if he goes higher for longer, right? Even if we crash the market down, the rest of the economy is pricing in inflation and higher wages over time. And this actually makes our stock markets worth way less than it is. I'll show you today the forward PE ratios for the S&P 500. They're at the buy stage here. When you see people out there talking about the S&P 500 going to 5,000 or 6,000 quickly, they fucking mean it. They mean it. You could see 8, 9, 10,000 in 10 or 15 years easily. The way that these cogs are moving down the road, it's huge. It's big. It's a problem too. So Jerome Powell's in this place where, does he destroy everything? He has to destroy. I'm a bull, but I got to tell you, he has to destroy everything. If he doesn't destroy everything, the path we're taking is a It's very similar to Japan. And you're talking about apartments going for $35,000 fucking dollars, $50,000 a month. And we know what happened in Japan thereafter, right? I mean, it was long and it lasted forever in Japan. U.S. hedge funds got blown up trying to short that shit, and they got run right over for what, a decade and a half. Now the pain that Japan went through thereafter was brutal, was sideways. It was brutal. You're talking about, like, let's say we have one more bull run, let's say for 5, 6, 7 years. And if we end up turning into Japan, you could see like just horrible stagflation for a decade, more than a decade, something like that. But there is real greed right now out there. There are cogs turning in the background right now that I can see plain as fucking day. Where for you to be middle class, it used to be, if you were single, this was pre-COVID, about $90,000 to $120,000 a year for a single person. If you had a husband and a wife, it was pretty well accepted that you and your wife, or you are a wife and wife, or a man and man, I don't care. But if you're married, that during your working years, outside of childbearing or adopting children or whatever, you could probably make about $200,000, right around there. High end 260, low end 180, somewhere in there, and you're doing pretty fucking well. That is not the case anymore. You have to strive, in my viewpoint, in the next 5 to 10 years to make no less than $300,000 to $400,000, $300,000 to $400,000, to be able to compete, to be able to stay in the pack, to be able to stay with what's going on as time progresses. So he's in a tough place right now. He really, really is in a hard place. Jerome Powell, I would not want to be him coming into this rate decision at all. And if we go back to that what I said to you about 5 months passing, he probably already knows that if he does not raise rates, even if the market believes him that it's higher for longer, it'll set in motion, which it already has. You can see it, right? You can see it's already in motion right now, pricing in eventual rate cuts, that we don't get any more rate cuts. They're going to price this shit in. And about 2 months before they do begin to cut rates, they will price in that back check to the downside. It's a really hard place for Jerome. He has not pulled a Volcker yet. And I don't know what to say to that for you out there as Bob or Joe on Main Street. I don't know what to say to you. It's very sad because a lot of people are going to get, well, if you're young, you're going to be in a great position if you don't mind that. But if you're older, you're going to get broke in half, right? If you're no longer working, if you are just relying upon savings, if you're at the end of your cycle of working, end of your professional career, no one's going to hire you and pay you $300,000 or $400,000. They're going to hire a kid, pay him less, and squeeze him for the next, 5, 10 years, as long as they possibly can. So that I guess that could be big to the stock market, but I don't know that those two intertwine. I think they run the stock market up, and they're going to squeeze out the a lot of people the people I just mentioned. Yeah, so Goat Boy just said I'm paying $2,000 in Ohio, but I just looked in Ann Arbor, Michigan. So I just bought another house. I'm going to renovate, right? And I'm going to go stay in Ann Arbor for 3 months while I do this renovation. $5,000, $5,000. I can pay that in fucking Vail right now. I don't need to go. Ann Arbor ain't got nothing on Vail. You got zero on Vail or any of those places. That's a lot of money for a lot of people, right? So there's this separation right now that's going to eventually come together, but you can already see it. You can already see it in what you're being charged out there. You can see it when you're being charged in fast food. You can see it what you're being charged in rentals. Fuck gas. I don't care about the price of gas. I care about, can get the lower gas help the economy if it doesn't go up below 60? Sure, and it will take some of the pain out. But this looks and smells to me like when I was young, when I came into the workforce, when I was about 18 years old, right? 18, 19, 20 years old. I was in the Army, right? Went to college. And my father had taught me how to cook and stuff. When I was young, I went to cook to pay my way through school, right? I'd pick up a job cooking. I was a good cook. They were paying me like $20 an hour. Into COVID, I know they were paying a lot of cooks still $20 an hour. So I caught the early part of that cycle. You're likely at a new early part of a cycle like it was when I was a young kid. When I was roughly around 18, 20 years old, you're probably at one of those points. And prior to when I was 18, 20 years old, there was wage stagflation for 10, 20 years before then as well. So think about that stuff if you're young. Think about that stuff if you're old, and where Jerome is in this cycle, how it matters in the economy and all that kind of stuff. So if we're going to go down that track, our stock market is cheap as fuck. You're going to look back on this in 10 or 20 years and be like, I remember 3,500. I should have bought down there somewhere. Does it make sense to you if you're a young person out there right now? If you ever go back and check that 3,500 or somewhere down in there and people are all crying or whatever, you probably either had a generational buying opportunity last October, May, or you're going to get one more chance at it for the next 10 or 20 years. I would expect the S&P 500 to literally go on a scream to the upside, just scream to the upside. I don't think he's going to fundamentally. These companies, like what the Fed tells you, right, and what the companies are doing are two different things. Forget the stock market. Look at what the Fed, the Treasury Department is doing, and then I want you to look at what corporations are doing. So the role of Jerome Powell and Janet Yellen is to appease Bob on Main Street. Okay? Their other role is to disseminate information to market participants. Okay? But then you've got other places that you can look where they don't care about what the Fed's saying, what Janet's saying to market participants. They don't care what Jerome's talking to Bob about. They have very smart people that work for them that say, I don't give a fuck what Jerome is saying. I don't give a fuck what Janet's saying. Raise the fucking price of eggs. You get what I'm saying? So I'm listening to those people. Those are the people that I'm looking towards. Like, why are they agreeing to these negotiations on labor deals with unions? It's because they can see it in the future. They know what's coming down the road. And I would warn you from an age perspective, if you're young, and if you're much older than me, if you're 60s, 70s, 50s, 60s, 70s, maybe you can even chime in and try to tell younger people that you've been through this even more than me. You've witnessed it in your own life multiple times, right? They tell you what's going to happen, and then it doesn't, right? Markets move on, the economy moves on, and you're paying more than you ever were. And you're actually getting less than you ever were as well, right? That's the insidiousness in the background that a lot of people don't get or want to talk about. There's an insidiousness in the background of you accepting less because you've never known better over time. That goes from clothing, right? Not the type of clothing, not cut jeans or cool T-shirts or whatever it is your fashion is, just the quality of it. You can't buy Levi's. The Levi's that I bought when I was a kid, I think they're $700 right now. And I think the low end of the jeans when I had when I was a kid they're now $400. Think about that for a minute. $400 to $700 for the pair of jeans today was not inflationary fucking even $100 when I was a kid. So there's an insidiousness in the underneath. This goes right to you're going to pay for your everything in your house is going to be a service, right? Your dishwasher is going to be a service. Your furnace is going to be a service. Your car heaters are going to be a service. It's a slow erosion everywhere. And a lot of young people don't even notice. They're like, well, I like this, or I find this is okay or good. It's because they never knew better, right? They never knew or had the experience of a quality. As a matter of fact, whatever I think is quality is probably not what a 70-year-old thinks is quality. I'd posit that if matter of fact, when I was a kid, I remember that metals began to change. A lot of people in trades, mechanics, anyone in like an actual trade would say nails suck today, tools suck today. There's no guarantee in tools, lifetime guarantee, craftsman, right? You don't see that shit anymore. It's just gone, right? So even just the quality of what you're getting is degrading. Even this past week, there was a huge discussion on Reddit about there used to be a disparity between fine dining and fast food. That disparity is getting closer and closer now, where you might as well just get the fine dining, right? In a lot of circumstances, even if you're not eating as much, you could probably go there, get a couple drinks, get an appetizer, three, four small plates with your husband or whatever, and get away roughly maybe $20, $40 more than you would have prior to this inflationary upcycle. yeah, exactly. Chocolate bars, right? Shrinking chocolate bars, shrinking this, shrinking that. I'm fine with some of that stuff, but the prices aren't coming down with it, are they? So we're in this next cycle right now, and regardless of what the Fed is telling you, you see the proof in the background. I want you to know that. Trust that about yourself. One of the greatest parts about becoming a new investor is they usually go. New investors usually say, "Man, I remember that I was using this product and nobody else knew about it. Then the stock went to the moon, or my kids used this one thing and boom, now it's going to the moon in the stock market, right?" So like this, this stock market's probably really fucking cheap right now. Like even though they're not telling you, it's extremely cheap. It's likely going to become cheaper as time goes on, which means it has to go up in price. Oh, so Mike Barry said something similar. Okay, yeah, cool. It's tough. So this week with Jerome, it's going to be difficult. It's going to be a challenge for him. I'm fascinated to see what he does tomorrow. The zeitgeist is that no rate hikes, and he is going to be hawkish in tone, right? We'll look today. We'll take a peek and see if we pause and hold for longer, which we've already front run some of that, right? And if he doesn't raise rates again, how long during that pause period, what takes place? When do they begin that roll down kind of stuff? We'll take a peek at that. We'll take a look at the value of the stock market, right? And forward PE ratios. It's quite low right now. It's at the buy. It's the place that they're going to buy, where Gunlack and guys like that will buy it. Even if we roll down, this is the place to buy. So there's some stuff out there that's saying look for major higher prices out there in the coming years ahead. Yeah, dude, Duolingo, baby, cranking. It's one of our picks. All those picks we have are now exploding to the upside. Like all of them. Every one we talked about this year is exploding into the end of the year. They're booming right now. Booming. No, your hands are not bigger. Sunday never ends. Yeah, and there's a part to this. I was talking to a friend about how it was. Whatever you don't know that it was better before. So if I train you as a company to accept something, and let's say I'm going through a generational cycle, right? And I'm like, okay, all these old fucks over here, they're never going to accept this. And they're going to bitch and whine, right? Bitch and whine. But these kids, they're not going to bitch and whine like the old people. And eventually, the old people are going to die off and stop getting angry and crying and all this other stuff. And the kids will become the new adults, right? And they'll just say, this is what I expect. And then as they cycle through this next generation, of course, will become 40, 50, 60, 70 years old and bitch about what they're getting. I noticed it when I was traveling to Asia when I was younger. I did. I noticed like more tech, less quality. And I could see the creep over the years here in the U.S. being accepted. It's kind of wild. Like they got electric bikes out there. It was like, do electric bikes. Hold on a second here. Gotta keep my eyes on this here. I gotta take some money if I can at some point, see if we squeeze up higher here. Give me one quick second here. I gotta keep a box at 46.50. Not sure we go this high, but oh, it's right there. We got plenty of room. I got this big old sell up here. Leave that down there for you. Okay, so you know about the Wyckoff phases, you know about all that crap, right? I'm gonna the screen down below as we squeeze up here. I'm gonna show you guys something down here. So just give me a quick second here. So we can go to a 1-day chart here. I'm just going to switch over briefly here. Hold on, give me one quick second. We're grinding up. They're not giving me a little bit of money, but none of this. They're just grinding the whole way up. I got to hold it all day long again. So these are rate decisions, prior rate decisions going back. I think I just did them to February in here. And we'll take a look at these rate decisions. Now, these last three right here, no rate hike. Now, we were selling down already into this rate hike, right? And we were selling up or buying up into this rate hike right now. Now, it's not an edge in any way, but you see that we're coming into a rate decision. Would not be shocked to see us go up into this rate decision. That's the track that we are on if we get zero rate hike. But then I'm also looking at, let's say we get up here. Do we come back down for that end of quarter in here at 45.115? So be aware of that. If we come into this rate decision and we end up squeezing up, right, maybe into next week after Friday, and then we break down into the end of year to 45.15, or if it's a no, if the rate hike is a nothing burger, right? We do the initial squeeze up, come back down, and then grind down into the 31st, and then you actually get your dip buy that you're looking for, or maybe you get a small Christmas rally and down right here. Squeeze up and then down, double top right here, come back down into 45.15, and then we're off and running for that actual January run, February run with outperformance by IWM. You should see decent performance out of S&P 500 and Qs, but not like IWM. And that would extend into likely March. January would be one big point, come back down for January, and then go back up for another big pump into March. So just be aware of that as we trade down into no raises, right? We stay on trend. So we should stay on trend if there's no raise into Wednesday, or at least the last few decisions that we've had, that's been the case. So we can glean that right there. Next thing that we're going to glean is, the next thing we're going to try to glean here is on the trigger screen. We're then going to take a look at I think it's PE ratio. Let's go take a look at this one, see if this is it. Nope, wrong one. Hold on. Give me just a quick second here. Unless I'm hiding stuff over here. Am I hiding stuff over here? Not hiding anything, am I? Nope. I might just be in the maybe I'm just in the wrong thing, am I? On forward PE ratio. Let me see if I can add this here. I think I'll find this in here. Does that pop up anything over here? Why am I not showing the Ford PE ratio? All right, we'll come back to this one. I usually bring this one up, and I don't know where the fuck it is right now. I'll come back to the PE ratio. Hold on 1 second. We're gonna look at one more thing up here. We're gonna take a look at this JPM collar. We're gonna look at the JPM. I'll come back to the PE ratio for you later. On the JPM collar, we have the squeeze up into. Let me see if I can make this larger for you. So traditionally on the JPM collar, we're like a magnet into the closest strike. You can see it right here, right? We blooded down right here. We actually started magneting the bottom one over here, right? This is pretty bad. Imagine doing that into this end of quarter, though. This began way before, right? We actually began this about just before halfway through this quarter, so I'm not expecting that. You can actually see, though, into this end of quarter, as we got close to that quarter, we had a magnet. Andy Constant likes to call it the vortex. See down here, right into the end of the quarter, sneak right back up, right? I know everybody said we're going to crash down, and that didn't happen. Then come up here, magnet down to the end of the quarter, right? Down here, and all of a sudden, whoop, end of the quarter, magnet to the closest strike. So for right now, the closest strike for that magnet is at 45.15, right? If we were to blast down here, but get a little bit close to the end of the quarter, we should magnet right here. Make sense? There is a possibility that if we were to bloodbath and reject, like the 15th or so or 17th, this could become the magnet, believe it or not, 4055. So we have to watch that. This is a very low probability that we go down this deep, but just remember that we have a vortex on the 31st, 45.15, okay? 45.15 into end of quarter. People will trade to that, whether you like it or not. You can kick and scream, you can bitch and whine, you can cry about it, you can do whatever you want, but I know for a fact that at some point, heading into the end of the quarter, about a week or two away from it, there are going to be market participants with a lot of fucking money that are going to go, where are we in price, and where's 45.15? Let's trade to it. Does that make sense? So just be aware that there is a large money out there that is hyper aware of that vortex, as Andy likes to call it, into the end of quarter. Hey, Darth Molly, what's going on, brother? Have a great day at work. It's SPX. Someone was asking this morning about when I say 4,600, why am I speaking about futures or Globex or SPX? If I don't say anything, I just write 4,600, that's SPX. Always SPX. That's because I pull the data from SPX. It's the most complete data that I can get to run these models. Everyone else runs it off of the SPX data as well. I find the best levels for day trading from ES, though, and nighttime trading for real levels like supply and demand. ES is the clearest picture. That's why we have the book map up and open on ES. If you watch SPY on Bookmap, it has levels at the 0s and the 5s for major buy-sell orders. So it's not as crystal clear as ES to watch. Hold on 1 second here. I got a text coming in. Hang tight 1 quick second. I got to answer this, or at least read it. Okay. So what else? Okay, I'm losing track of thought. So this is your JPM caller that you need to be aware of. We're gonna get back to that PE ratio though at some point because I think it's critical. Now, next thing we're gonna look at here is going to be, let's take a peek at SPY really quick. We're going to check out a 5-minute basis here for tomorrow. See if I can bring this. You guys can snap this and have this available, okay? upside trend is this green. So we've got Wednesday, Thursday, Friday, right? Move this over here. Upward trend, okay, for bulls and bears. I don't care if you're a buyer, seller, whatever. Right now, right, we are trending up. We are, every time we confirm this green bar, what do? We're bouncing right now. So until we get underneath this green bar, reject, right, and start to head lower, come back up, and that green bar comes down, right? The green bar goes right here. Until this begins to happen, bulls are in charge, okay? Period. Bulls are in charge. So as of right now, upside trend. We have low volatility right now, right? And we're low volatility and we're in positive gamma. So you're going to expect grinding sideways, upside moves, and walls above. You're not going to expect like big giant grinding or big giant squeezes, stuff like that. We traded this for how long? How many sessions down here? 13, 14 sessions. Then you got a big move, right? And then you're going to expect 13, 14 sessions, or even maybe this week it should only be till Friday. But we have a pin on the market here, roughly right here. Okay, so roughly right here, this green bar. We have tomorrow the event. We are kind of tied to this area. Even if we have a bloodbath, we should come back up, or a squeeze higher, we should come back into this area to print a bunch of shit. We got so much gamma that's rolling off in this zone here, 4,600, 4,650, heading into Friday. So here's your play area. We're down here, we're buying the dip. We're up here, we're selling the rip, right? Come into this event in here, and you're either sitting on your hands or you're day trading it, right? And cutting your longs or your shorts as we come down into these zones above and below. If you see during the Jerome Powell rate decision, he tells you, I don't know, we raised 25 BPS and we blast down underneath the hourly trigger and we begin to reject at any point into the close, or we close below this thing, I'll give you we'll go down farther later on. All bets are off the table. We're going to torch all this shit. Or even we go down and then swing back up and sneak up in here, right? They print all these calls worthless, right, on Friday. So I'm aware of all this. You should be aware of all this too into Friday, that we are kind of tied right now into this market here. Now, if we do break down, we squeeze back up on a Friday to touch that, and we want to make some more downside moves, let's take a look at where the daily trigger is on SPY. Give me just one quick second here. $449.99. So let's call it $450. Right down there, just so you can see it. Let's see if we can get a snap for you guys up there. If you're a bull, you want to get above this yellow box. If you're a bear, or if you're a bull, you want to get above this yellow box. You want to buy the dips on this green box. If you're a bear, you are looking to get underneath this green box and reject. Hold on here. You want to get underneath this green box, begin to reject, so you can begin to make the move down to that 450 to the downside, maybe even squeeze down below it and come back up. So you're trying to get underneath, if you're a seller, underneath currently 461 on SPOOs, 461 and some change on SPOOs, underneath this 460 area, somewhere down in here, to get down to that 450 area. Now, some notes here I'm going to give to you. One quick second here. Some notes that I'm going to give to you real quick in the background, and I want you to write this down at home if you can, okay? I'm not going to post this on FinTwit right now. One quick second here. At the money volatility for tomorrow is decreasing by 17.2% from 19.1%. The straddle is down from $37 to 42 from to $37.70 to $42.80. According to the Fed Funds Futures March contract, cut in March remains off the table. Here's the part where what I want you to write down, okay? I want you to write down SPX dealer gamma is 1050 million. Gamma flip is at 4560. So the gamma flip has come up, right? The call wall is at 4,700. So if you get above that 4,600, which should, after Friday, if we get no rate hike, right? As we come into Friday, the gamma wall at 4,600 will break or weaken, and the door will be open to 4,700. Key strikes right now for you are 4,600, 4,625, 4,650. The zero date range right now for today is 45.85, 46.50. We're way below that right now. The massive gamma imbalance will continue to restrict the free movement of the SPX until Friday, when about 400 M worth of gamma will expire. And the range between 46 and 46.50 seems plausible for this week, but that door will open to the upside once Friday comes to pass. Now this discludes any rate hikes. If we get any rate hikes, if we get any rate hikes at all, you're going to see, if I write this down here, you're going to end up seeing us flip to negative gamma quite quickly. So 4560, 4560. What should I write? Maybe I should put that in there. That negative gamma in there for you. Right about here. Bring that down for you right now, and we'll just do this one more thing for you. Let me see if I can get that looking pretty for you. Hold on. Maybe this helps for you right there. Oh, hold on. Let me bring this back. Hold on. They don't want me to. There's your negative gamma down here. Forget this one down here. This is for a previous trade here. This is a hourly trigger from way before. Hold on a second. I'm going to clean that up for you. So let's get rid of a bunch of this crap in here. Hold on. Let's make this nice and clean for you. Yeah, there's Valhalla up here. This Valhalla, this is the door that's open to this 47 up here. So no rate hike, right? Come in here, trade this. Next week, bam, looking for that up there. There's your 4,700. You get a rate hike and you kind of doom and gloom, get down underneath this negative gamma, right? Swing back up for that Friday, but you're in negative gamma down here, right? Reject, and then boom, that's where it gets nasty into next week to the downside. Whew. Well, I'm just going to bring this up a little bit for you. We'll just make this a red bar up here. And then this is your daily trigger down below. Oopsie. See if that helps you guys. Let's just get rid of all this crap here. These are all previous highs that I'm watching. So there you go. That's what you need to know into tomorrow. We're going to quickly get back to the main screen here, and I'm going to then chart out for you the expected moves on SPY tomorrow. Give me one quick second here. So SPY expected downside today 461.23. Upside options market is pricing in 463.50. For the 13th, the upside expected move is 465.39. The options market pricing in 465.39. That's that upside target of 465 we talked about all morning, right? Downside expected move tomorrow 459.28. So if everything comes in as expected, right? You got all the talking heads out there, you got all the people out there talking, right? You get the Fed no rate increase, you get the Fed with the firm talking to, the slapping from the Fed. The expected range for tomorrow is 465.39, 459.28. Heading into Thursday and Friday, though, we have range expansion. 467.35 on SPY and downside 457.66. And from there, we get some pretty big range expansion to the up and downside. So be aware of that as well. We've got a real tight range compression heading into tomorrow's rate decision. So I might be waiting for that rate decision to be making any conviction trades that you want to put on permanently. You might expect a squeeze up and then a pullback for you to actually buy into the 15th for that run up into the new year, or even a blast down for a dip to buy for that Santa rally that you're looking for, a holiday rally that you're looking for, or a sell down. So if we squeeze up into end of year, I'd be looking to short this shit into the 31st. So if you're an investor or a seller, if you're making like big plans as to where we go, they're not even talking about the IV crush unless you're getting spreads or something. It might be prudent for you to sit on your hands heading into tomorrow's rate decision so you can get a nice place to buy a dip, or even a nice place to short the market if it rips to all-time highs. This excludes all of the lotto trades and all of that kind of stuff. Yeah, I brought the gray love bar back, by the way. I did bring the gray love bar back. I figured, my question was, are we going to, this morning I was like, if we start selling, if they can break through that 4,600, they love that fucking gray love bar to sell off of. So I put it on this morning for you so you'd have it. Hold on one second here. Did you guys see, I posted about a putback spread on Twitter this morning, and then like 3 hours later, CNBC professional put out the putback trade. I thought that was great. I was like, who the fuck is watching me from CNBC? Like 3 hours later, they posted fucking their favorite trade for this, and that's a putback spread. And I was like, fuck yeah, CNBC, go. What else do I have for you this morning? I think that's it. I mean, if you guys want to talk briefly about what to expect tomorrow, trade it up into the open tomorrow, and then what do? We short it down for the, or we, no, what they do in the, I forgot this. I almost forgot this. So they squeeze it up tomorrow in the opening bell, right? They trap you, and then they short it down for like an hour or two. You're all locked in. Your fucking calls are burned, and then we squeeze up leading up into the rate decision. Of course, if you don't know this, you've got the rate decision that's released, and then you have the interviews where he's got his tie on, and you find out if he's going to break out the stupid charts. Hold on.
Crude production in 2024 is forecast at 13.11
What the fuck is going on with these guys today?
Compared to 13.15 million barrels per day projected.
Turn that down a little bit.
Slight decrease from the EIA steel report. So 2023 output estimated at 12.93
Hold on one second here.
Million barrels per day, up slightly from the 12.
Jesus Christ! I tried to pause it. It wouldn't even let me pause. So the idea here just being that when you go into tomorrow, I want you to realize a couple things. We're going to talk about those couple things, okay? So we're going to drill down here. We're going to drill down into normally what happens. Not guaranteed here, but normally what happens. Should see a move to the upside in tomorrow, where that move is like that or like that, right? You're going to come out here looking all bullish and crazy. You're going to be foaming at the mouth or whatever. And you're going to start just like this, and normally they'll smack you down. We'll get to like 11 o'clock or so, 11:30. Start running it back up into the initial report. Now we get that initial report. We know that there's a ceiling of some kind at 465 and change, right? We know that on the downside, there's some kind of a bottom in here tomorrow. Some kind of a bottom unless we raises or something like that. And what I want you to remember is that let's say we do this. Let's just say we squeeze up. They trap you in here, right? They get you right in the middle of this range, right? And even if they front run this up for the 2 p.m. even if they run this up to the 2 p.m. rate decision, let's say, right, you get the squeeze up. Normally what they'll do is they'll snap it back before you get over it. And that's dealers that are murdering your calls and murdering the IV and repricing options. So make sure you get out quickly, like you get out here, even if we're going to go higher. And you got to rebuy zero dates again if we are going to go higher. Same thing on the downside. You should see like a blast down, immediate pullback up. They'll reprice puts, and you're like, oh, yeah, we're going down. And you're like, yeah, you're still upside down, buddy. They repriced your shit. You're fucked. So you have 2, 3, 4 trades tomorrow. You have 2, 3, possibly even 4 repricings. You've got the guaranteed. You got a upside move in the rate decision. If it's positive for you, it gets pulled back down. Then you get the second one. Then they pull it back down again. It's 1, 2. And then you've got the interview or the presser, the Q&A session with a little bit more volatility down here, right? And then you actually get your move tomorrow to the upside. So don't be trading your whole entire account. Don't be trading your entire account on, don't be trading your entire fucking account on this event. Now, if you want to do a put spread or a call spread, ratio spread, whatever, you're going to fucking butterfly. If you're selling straddles, that's what I was going over this, there's a big trade out there that's getting eaten alive. There are straddle sell. I don't know if you know this. You guys may or may not know this. I saw Jedi Marcus earlier in the week commenting on it. Nobody picked up, but I got like 5 fucking likes. There's a large trade. Every time I come into these events, smart traders will sell straddles on this event, and they're getting fucking smoked right now on these moves higher right now. They're getting beaten up badly, and they're just begging for price to come back down. Oh, yeah, they're plagiarizing me. I'm being watched. I already know I am. I've been knowing this for a while, so. I plagiarize, though. I steal shit from people all the time. I try to give credit. Sometimes I forget, but I think that's part of what we do, right? I don't think it's a bad thing either. I don't mind if you plagiarize me. If you guys ever plagiarize me and don't give me credit, I'm fine with it. I got no problem with it. We're fucking retailers. If anything, right? If you guys out there, I've heard people in the past say that guy's plagiarized. Never to me, but I've heard people say it about other people. I'm like, I don't give a fuck. We're retailers. You can't be plagiarizing us unless you're a fucking bank, right? I don't like when banks plagiarize us. Like during GME when they went into all the social media and figured all that shit out. That pisses me off. Retailers, help each other out. Fucking not only help each other out, but disseminate the information, push it, and then and make sure that enough people get that information. Right or wrong, the retailers need information, so I got no problem with it. So my point here stands, okay? My point here stands with let me see if I can get this up for you guys. My point here stands with you on tomorrow. I'll tell you what, man, if you're like we're going to go back. I'm going to bring up another chart here in a minute. We're going to look at we're going to have a chit chat about, somebody just brought up the 10-year. We're going to have a chit chat about when the 2s and 10s matter, when they don't, how they're an awful fucking indicator. Please, I've been saying this for years now. Please, you're either going to fucking lose all your money or you're going to come around to what Captain tells you on this. Stop fucking using the 2s and 10s. It's used by subsellers to write a fucking narrative. Sometimes it matters. Sometimes it doesn't. It's right about 60 to 70% of the time. Very poor indicator for where the market's going. Your best, especially on a macro scale, your best indicators are typically the unemployment rate of unemployment, to a very smaller extent, the jobs numbers. So unemployment. Number one, unfucking-ployment. Tell every person you see for the rest of your life, unemployment is why the market goes up and down. To a lesser extent, jobs as well. They can amplify or give us a Goldilocks. They really do impact that what employment numbers mean. Your second one is always going to be Fed funds rate. Your third one is going to be inflation, and where inflation is, the direction of inflation, if it's heading down, and also when it hits support or resistance. Okay, so inflation matters, the direction, and when it bounces. As a matter of fact, you should see an inflation bounce and a Fed fund rate cut and unemployment right around 6 to 8% for that to trigger major macro moves in our stock market. Now, 2s and 10s, 2s and 3s, they matter, but not like if they're aligned with those other things. Sure, they can matter, but on their own, out there on their own, they're a very fucking poor way to make decisions for a macro thesis for an investor or trader out there. I'm sorry, it really is. So historically, it is as well. We've shown that on the show time and time again. So I don't mind using it as like a third-rate tool. Like I've got my hammer, I got my fucking nail, I got my wood, and I don't know, some kid wants to hold the nail for me. Sure, but I ain't looking for that kid. I can put that fucking nail in my own hand and swing that fucking hammer with a much higher degree of accuracy than some kid holding that nail for me. Is that the best way to describe it, maybe? So that's the stuff you should be looking for. Come on, dude. Fucking print me, dude. Seriously. All day long yesterday. Dude, I had to wait yesterday till the fucking close. Fucking Christ. Sorry. We'll keep this over here, too. You've got this target up here. You guys already know the rules. All right, got that bad boy right there. You got another couple little sneaky peeks over here. Let's see what else. We got a little gap right here. We'll draw in a little yellow one right in there. Make this one yellow. Bring that puppy over right there. Whoop. There you go. So you can see it right there. Okay, so tomorrow's rate decision. Let's chat about that before we get into the all the macro shit. Remember, we are pricing in. Remember this. We are pricing in no rate hike. We're pricing in a dad's come home. We had just had a party. Dad's coming home. Dad is going to attempt to do one of two things likely if there's no rate increase. He either gets really hawkish in his tone, like higher for longer, and more than likely more rate increases. Where we are, that's likely fucking bullshit. And he's likely going to get called on it by the market. Okay? If the Fed pulls out, if he comes out and he does a victory lap, that would be unexpected. Okay, so if the Fed chair comes out, he's got a green tie on, and he's like, mission accomplished, we did it. That is very dovish. Be careful of that if you're a seller for an crazy upside move. If we get 25 BPS tomorrow, that is highly unexpected. Why would we get a 25 BPS rate hike? I'm going to tell you. It would stop the machine from pricing in maybe a little bit more pause, but then really front-running a roll in about 2 months before that cutting of rates comes into being a reality. Trust me on this stuff, guys. Our fucking whole entire fucking market is traded. You guys have been with me since the beginning. We've traded this market together, right? We've projected all this shit, and it's all come to fruition, right? We already talked about the rate cuts starting by October. I saw the fucking articles yesterday, but everybody's saying expect rate cuts by October. Then they're one-upping each other saying by May. Talked about the weakness in February and April. Talked about chasing. Talked about the unemployment rate tracking 6%. Then they gave a bullshit unemployment rate this past week. That was a fucking lie, what they gave. I'm telling you right now, that unemployment rate was a fucking lie. We're tracking up and to the right to that 6%, 8% into the end of fucking December next year. That's what we're doing right now. So, I always love what they fucking tell us, and then what's real. It's like takes 5 fucking seconds to find this shit. Anyway, so. Well, so I think for me, from his perspective, if there was a time where the internal cogs of the machine are going to price in a bunch of shit in 6 to 12 months, this is his last fucking chance. I even think if he raised in 3 months or in January, it doesn't fucking matter. It doesn't. He's going to trigger. He already has. You can see it in price in the stock market. You can see it in price in IWM. All this shit is being front ran right now. It's all being fucking front ran right now. So those cogs are already turning, and if he doesn't do anything, those cogs are going to speed up into next year. So I'm telling you, that this is what's going on. So I'll tell you my personal preference. I hope I've taken my trader cap off, putting my Main Street hat on. I hope to fucking God they raise 25 BPS tomorrow. That's not my trader hat. It's just my, if you don't want this country to go where the fuck it's going, please, Jerome Powell, if you're out there listening, one of your minions is listening right now, fucking do it, man. Like, seriously, just fucking do it. Even if you send us into a recession. I'm not anti this soft landing, but it results in out of fucking control prices. Like, it's going to get stupid. We're greedy. I'm a greedy man. I'm a greedy motherfucker. And if you want to turn that greed on, Jerome Powell, I'll run with it with you. But I'm telling you that, like, he's going to fail and declare victory. If he's going to declare victory or pause with hawkish language and then come out with bullshit inflation numbers and bullshit around the election, that fucking pisses me off as a Bob on Main Street hat. To be honest with you, I'd be fucking outraged if I was not a stock market participant. I'd be angry for what it spells for us down the road. But I'm with the expectation. I'm with pause, hawkish language, threats, all that kind of stuff. But the mechanics in the background, I told you guys what the fucking mechanics would be 2 rate decisions ago when he pulled out all that bullshit maps and all the fucking charts that were 30 years out and shit. I was like, that shit is not going to go over well. And we're standing here right now, a couple months later, and you can see where we are in price. So that was a bad fucking move by him. He triggered that shit. He triggered where we are right fucking now by doing all that stupid shit. I hope Jerome Powell, if you're a minion, one of your tiny little minions out there listening right now, I hope the fuck they fired that asshole who told you to do that shit. AI, where the fuck told you to run that program during that last rate decision? You're out of your fucking mind, man. You're the president of the fucking Federal Reserve. Fuck's wrong with you, man? You don't have to do that shit. You put that off on your minions. You're the guy that just goes out there and tells you, yes, no, we're going here, we're going there. Leaders don't fucking come out there with 30 goddamn charts 10, 20 years out. You're out of your fucking mind, man. Oh, yeah, dude. I'm yelling. I don't want to talk about yelling. Look at yelling, dude. Coming into R1 right now. Be careful here. There's a little small bump right here. Little roadblock right where we are. If you look down below, you'll see we're coming into R1 right now. Squeezing up higher right now. Not paying a ton today. They're paying, but it's not like they should be. So it's the grind, baby. We're in the grind today. Just grind it up, grind it up, grind it up. Slow grind. Here's a penny, boss. Thanks. Thanks for the fucking penny. Fuck you too, dealers. Let me whip out my iPad. Dude, you know what? I used to think the iPad was bad. Fuck the iPad. Like, when he did the charts, I was like, that's it. I'm out. I'm fucking done right now. Like, I thought the charts were bad. Oh, I gotta check my portfolio. Hold on here. Hold on here. As we squeeze up here, I'm going to close some of this shit up. I'm looking for that yellow bar up there. Come on, dude. Squeeze it off. Squeeze it off. Squeeze it off, dude. Okay, so, sorry. I know. It's like fucking print this shit. I'm looking to sell like right in here. Pretty close. I know you guys always call me Captain fucking, what do you guys call me? Captain Paper Hands? But I want to jump back in. If we can like do that and then come back in and do that. Come on back down here and grab that right there. Just keep your eyes on that right now. You guys like making money with me, right? So I don't know what to say about tomorrow. I really do hope 25 BPS. I'm begging. If you're out there and you know Jerome Powell, fucking begging you, man. Like, please. I don't want to see my kids having to go through that. I really don't. I really, really fucking don't want to see my kids going through that. Yeah, Jay Shady just said it right. Jay Shady just said, quote, we remain committed to our goal to get to 2% inflation and are ready to take the necessary steps to get there for the 1 millionth time. Maybe Powell shouldn't waited 1 year too long to start hiking. He's just so over his head. Yeah, I can see that. Jimmy Barry's in the house. I always trust Jimmy Barry. Let's see what he's saying right now. I'm going to read what he's saying. Just a note, Captain, SPY has completed its December 15th pricing, which was 462. So next levels are either 462 or 452. All eyes should be on the BOJ. Japan will trigger a global collapse if they start moving rates. Japan's exports are fading and they are a recession tipping point. But for now, so many people are short the market will continue to squeeze up until it doesn't. Jimmy Barry is also pointing out these global markets fundamentally are moving up on massive debt levels. I agree with that too, Jimmy. Jimmy, I'm really scared. Before I get to this, I haven't read the rest of what Jimmy's said at this point. Jimmy, I am fucking watching global oil like a fucking hawk right now. I don't want to see it break below 70. I don't want to see it break down into the 60s, 50s, any of that craziness. And that is a tip. For me, that's what I'm watching for that global recession. These global markets fundamentally are moving up on massive debt levels, which is not good for the future. And as I've been saying for a while, the housing market will be the catalyst. Pre-market highs could be tested at 464. Powell will say as long as... Oh, Jimmy, I want to say thanks for writing all this, man. Powell will say as long as employment numbers are strong, rates will stay higher for longer. But I do not see any rate cuts, only rate rises into next year. The sole reason the market has not dumped is the positioning of so many shorts. So we do not go down until positions switch to longs. David MS is asking, if the mention anything about QTQE can be bullish? Jimmy says, personally, earnings will call the Fed's bluff. Eyes should be on the Bank of Japan. I do watch the Bank of Japan and the yen dollar. Oh, yeah, dude. You remember when he rolled out those charts, Sparky? I was like, I had a fucking meltdown when he did that shit. Now, there is something here. I think that David might have been touching on this. I'm not sure. Now, if we pause and the market were to actually believe that he's going to raise again, this is the outsider thing. if he pauses and the market believes him that he's going to raise again, like they believe, the market believe. There's a couple things here, a couple outsider things, a couple like outside things I want you to not bet on, but I want you to think about. If he pauses and maybe he announces a rate the next, maybe he says, hey, we're going to have a rate decision in January. He tells you that because they can make them in January, February, March, wherever. If he tells you, if he can make it a fucking rate, if he tells you, like, say, he comes to the meeting, he goes, we're going to have another one in January, a meeting, rate decision, and we're going to raise higher for longer. We could have an initial pullback, right, of bearishness and continue on like we have in 2022, 2023. That would be a sideways and up grind with normal pullbacks, normal corrections, that kind of stuff. You can see those periods took place in the 50s, 60s. I think it was the 60s and 70s. I think it was maybe the end of the 50s. But those Volcker years, what we ended up doing was we traded sideways. It's like a stagflation type of an environment where we slowly go up. You're looking for corrective moves like the lows in May and the lows in October, like the low we just had. You're going to buy those. We'll trade them up. We'll slam a new high, come right back down again. That is an option. I don't know that the market participant or that the big market participant is going to believe this, though. And you can see the mechanics of it that they don't believe it right now. But that is an option. Another option here, another really outside option here. This is the one that is a very low probability, but when it can matter when it does, and that is the bond vigilantes. If there's a group of people, a very small group of liquidity providers and business magnates and leaders that everyone listens to, and these guys, if these guys aren't happy with this whole thing, if they're like, yeah, fuck you and your soft landing, like basically fuck you and your soft landing, they can step in and sell the fuck out of this market, real money, and bloodbath this shit into the depths of hell. That's an outside, very small chance, but that is a possibility. You heard me earlier bitching and whining about what my Main Street hat wants. Those people want that too, to some extent. They love the sideways and up market. They don't want to see markets that go out of control. They don't like seeing the 2001s and the 2008s. They don't like that shit. Those people, if they're to step in, there's a possibility they could have a hand on the market that we don't see, that we have that actual second leg down like we did in those years. So I'd be paying attention to that as well on a very low probability. Yeah, Cap, did I see that Congress wants to ban Wall Street, B of A, and et cetera, hedge funds from purchasing homes? I'm going to let you guys in on a secret, okay? You ready? Real simple secret. The more rules you make, the easier it is for me to do what I want to do. Does that make sense? Our country is founded upon that. The more rules you make, the more money I can make. I'll leave it to that, okay? I doubt that's in your best interest in time. I doubt there is not a way to get around that. I do. I really doubt that there is a way to get around that. And not only that, I did see it. It's more than likely about election season. But even if it was to pass, the more rules, the better. Same with taxes. Not attorneys, but your tax attorney will tell you that. CPAs will tell you that. Your bookkeepers will tell you that. The more rules, the better. Well, as long as you're working within the rules, you can make money. Does that make sense in any way, shape, or form? I don't know if it does or doesn't. Yeah, we can look. You want to see the? You want to see the? You guys want to? I showed it yesterday briefly. You guys want to see some cool shit? Hold on. Hold on 1 second here. You guys want to see some coolness? I got some coolness for you. Hold on here. Is this not? But did they take this down again? Fuck. Might have taken this down. Just check something here. I had a new tool yesterday and it's gone. Hold on here. Long short ratio, leveraged money ratio. Oh, it's not working right now. I'll have to come back to this later. I've got a new tool that shows me puts being sold, calls being bought. It's fucking dope. It's doper than any one of them that are out there. It's doper than the fucking spot gamma hero indicator. It's badass. better than some other 4-letter ones. It literally shows you in real time 0 dates. Real time 0 day put buying, call selling, selling, put buying. I showed it on stream yesterday, but it's not back up right now. It's not working yet. So I can't show it to you right now. Yeah, I'm long right now. I'm long right now, brother. If you don't already know that. I've been long since the bounce this morning. Now I'll show you later, Trader Podcast. You're in the inner circle, bro. You're in the inner circle, so I'll show you behind the scenes someday. Well, not someday, but we'll talk. You gotta keep some sauce secret, man. Can't have all the fucking sauce out there. These fucking savages will Robin Hood that shit and fucking make it useless. Hold on a second here. Hold on one second, guys. All right, so I got to get back to work. You've got my rants. I went off on a diatribe here. You guys, I'm going to tell you a few. This is how I'm going to leave you here, okay? I've said this before. I'm going to say it again. Easiest fucking thing in the world you can do right now is put on a far-dated putback spread. Date that shit for like June. You're going to slam the upside. You're going to slam the downside. You don't even have to make it that wide. You'll be able to cut. You'll be able to cut both sides at your choosing. Does that make sense? You can just cut one side loose when it's printing, huge and hard and heavy. You hold the other side, and we'll come back down. We know we have seasonal lows in February and April. You're going to catch the seasonal lows at some point. It's like a no-brainer fucking trade. If you're trading it on a ticker that doesn't move, like something that just flat, you're fucked. You trade it on something that's not going to move this week, you're fucked. You date it out far enough in time, especially on S&P 500 or even Qs. Do it on Qs. You know how volatile that is, right? You're going to swing up and you're going to swing down regardless of where we're going. Another note here would be, if you don't like that trade, just know that 45.15 is a fucking magnet, right? As long as we park this shit into the 31st or a week later or even the 15th, we'll talk about that right now too. Trader Podcast brought this up the other day. I'm going to give this note here that this quarter, write this down. Get a piece of paper. Get a piece of paper and a pen. Seriously, write this one down. This quarter, there'll be some bears out there that'll tell you that as soon as this quarter is over, we can crash. Not crash, but, fucking go to the depths of hell. This quarter is not only are the indexes being held up by the 15th expiry, the 31st, I think it's 29th expiry, but the underlying of the indexes, all these fucking single ticker stocks, that expiry is not until January 15th, I believe. So you could see a sustained market pin into mid-January before you see even have the chance for us to go to the downside. So maybe lube up those 45 or those 45.15s for like middle of January, end of January, and then you come in and you either hit it on the 31st of December or you hit it if you're doing spreads, butterflies, any of that kind of shit, condors. Just think about maybe extending that a little bit in time. Thanks. Trader Podcast just said January 19th. So I got the date wrong. January 19th, and expiration on the 17th of January. So be aware of those dates. How about this? I'll say this right now. Binky, How far into the stream are we? It's 1 p.m., 12:47. Binky, if you're out there, don't say I didn't tell you that a bear's going to tell you that we're going down on the 31st. Depths of hell. And it's going to be postponed until late January due to the underlying single tickers. So when they start to ramp up that noise as we head into the end of the quarter, right? And they fucking fail, and they say, "Oh, my bad, it's not until the 19th of January." Recut this fucking part of the stream out so you can post it on FinTwit. Thanks, Trader Podcast. Appreciate that, brother. Save that one for later. No, I don't. By the way, if I've said anything that is counter to Andy or Jem or anything that they've said to you, please. I love those guys. I trust what those guys say. We have oftentimes all have said different things publicly on record. I've been wrong. I say I'm wrong. I'm wrong. You guys see me lose money when I'm wrong, right? Andy's been wrong. Jem's been wrong. You guys got to stop going after these people. I see some, it doesn't happen as much. I don't see it as much, but like I see sometimes they'll like attack Jem or they'll attack Andy. Don't do that shit. You guys are lucky those guys are there. Like, can you just imagine one day if like Jem was like, fuck those people on FinTwit, or fuck those, or Andy's like, you know what? I'm tired of the fucking trolls. You guys should go to their defense, even if they're wrong. You should go to like, seriously, I'm being dead serious here. Like guys like Jedi Marcus, guys like who's the other guy? Who's the old pit trader that's he's like a beautiful hippie man now. I forget his name. I always fucking forget his name. Anyways, he's another cool guy out there. But any of those guys women out there that you see out there, even if you disagree with them, be grateful they're out there. Seriously. You're a fucking retailer. What the fuck are you looking for? Like, you think a bank's going to tell you? These fucking guys spend their time dicking around with us all day long, even if they're wrong. Please, do yourself a solid. Support those guys, those gals, when they're out there spending their time with you on the internet. I'm serious. Like, if they weren't there, you'd be fucked. So they're a wealth of knowledge. It doesn't matter if they're right or they're wrong. It really doesn't. It matters that they're there. You're the ones watching them, right? You guys are the ones. You guys are in their I see trolls on their posts, and I'm like, why are you trolling this guy? If you're a troll out there for Jem, right? I'm going to tell you a couple things. If you're one of those trolls, I'm going to tell you one. Not that you are, but if you are one of those and you're watching this broadcast right now, I'm going to tell you a couple things. Number one, you are actually bringing Jem more follows, believe it or not. If you're reposting Jem stuff and saying Jem sucks, or he's wrong, or look when he was wrong, I want you to know Jem gets more followers for that reason. Believe it or not. I know you don't believe that, but that's how the algorithms work. Okay, so if you don't like Jem, or you don't like Andy, you don't like me, don't comment. Believe me. The more you don't give it traction, what these people say, the worse it is for them. That's the greatest thing you can do, believe it or not. How you get followers is typically posting something that's wrong or counter to what everybody believes, all that kind of stuff. Believe me, that's really true. Second thing here is you're a fucking retailer. It doesn't fucking matter if you're a fucking bull, bear, seller, buyer, buy curious, whatever it is you are, fucking stock buyer, stock seller, I don't give a fuck. Theta gang. Those guys are all out there dropping knowledge. If you don't like them, fucking mute them or block them. That's what you do. You don't like what they're telling you. If your sauce that you want to hear is something different than what you want to hear, or your positioning, and you don't like it, just fucking mute them. I mute people all the fucking time on Twitter. Not all the time, but there was a time when I was following some people that I was just like there was a time when I was young, I was like, I'm following these fucking people. I'm like, no fucking way. No fucking way can I follow these people. Like, get on Twitter, young on Twitter, like, no goddamn way. Like, I was like, I'm following this guy, and I'm like, I'm not going to name like Mac 10. I shouldn't say that name, but like Mac 10, right? I had him on my fucking stream. I can't watch that guy. It breaks my heart. Breaks my heart. Northman Trader. Love him. Great trader. But some of the stuff that he's posting at the wrong times, I'm like, I can't watch this shit. I can't have it in my feed. Other people, I can't have them poisoning my thesis or my thought process. So if you're going to mute these people, you want to be friends with them still so you're not like a dick, mute them. Craft your feed for what you want to get from Twitter. No, believe it or not, if you like them, you're typically not helping them. Well, you are. If you're like, I like you and this or that or whatever, but believe it or not, the people that help are normally the detractors. I don't know if you know that, but detractors typically bring you more followers, not followers. My best friends on Twitter, ones that I've had since day one, are rarely in my feed. I have to seek them out. Like people that I knew when I had no followers, I have to seek them out. One of my closest friends on Twitter is Joe Donut. Okay? Twitter algorithms intentionally steer me away from him. I don't see his posts. I don't get to interact with him. I have to seek him out. I have to literally go to his fucking profile once a week and go, I missed this. I missed that. I missed this. I missed that. It's intentional. They want you to fight with people. Truthful. Very true. Yeah, no. But I mean, you get enough of certain. It's not. I'm not gonna. I was using him as an example because he's an easy one. He's an easy target. But there are ones that are like 100,000 followers, 20,000 followers, 10,000 followers, 50,000 followers. I'm like, there's no fucking way that's right. They might be right. They might be right what they're saying, but it has nothing to do with the price of the stock market. So, you got 100,000 followers and you're dropping some fucking data on me, like data dumps. I don't give a fuck. I'm here for money. Are we going up or are we going down? That's the important thing, right? I'm here to make money. I'm not here to discuss fucking. I'll be honest. I mean, I like reading that shit, but I'm not here to like what I like about Andy. Matter of fact, what I like about Andy Constant is my in or out of the market. I want to know the mechanics of it, right? So that's why I follow Andy. But then some other guy out there might be dropping like, this is the worst debt that's ever been accumulated by Bob on Main Street, and that means the stock market's gonna crash. I'm like, fuck that guy. I'm like, he's out of my fucking feed. Like that fucking shit's bullshit. That has nothing to do with the price of the stock market, right? No, I'm long all day long here. I bought the dip right here. So I'm long right down here. I've not sold. I bought this dip fucker down here. I did not sell this one right here. I want to see this yellow bar, this black bar. I did this bullshit yesterday. Just sat here all fucking day long. It sucked. It really sucked. I was like, check, go, come back, check, come back, come. And then right at the fucking close, they did it. Yeah, I don't think you can. I guess over time, you can look at a trader, an investor, and say, they're right. They're wrong more than they are right. But like Andy's right more than he's wrong. Jem's right more than he's wrong. You know who they are. You can see it, right? You can see the people that are fucking always wrong, or they don't adjust their positioning, or they don't tell you publicly that they've adjusted their positioning. It's hard. I stream every fucking day for 8 hours, so you guys know where I'm at any moment. If I'm like, hey, I'm gonna drop this like a bad habit, you guys already know about it. Those guys don't have that ability, so they do it on Twitter, and I like them for it. Like Jedi Marcus, that whole entire clan of traders, SPX trader, M. LeBon. I mean, there's a bunch of guys out there, women out there that are badass traders. Yeah, exactly. Yeah, who said that? When the facts change, I change my mind. I'm the same way. Like, price rules to me. You guys know that, right? Price action trader above all else. Like, what does Cap use? Number one, price action. I'm not going to sit here if I'm like short the fucking market and it just keeps grinding higher. I'm not going to stay short. Market's rolling down to the depths of hell. I'll buy the dips, but I'm not going to fucking say it's turning, right? I'll buy a bounce, but I'm not going to tell you, yeah, we're turning around. We're going up to the moon here. Any of that kind of stuff. Alliant Capital. You know what? People have come to me in my DMs. They've said Alliant Capital doesn't trade the market. He's a fake trader. He's this, he's that. I like him. The guy's spot fucking on. He says things. He gives you data that matters in the market. The dawn of spoos. Guy's a baller. Guy comes out there, tells you I'm long, I'm short, I'm this and that. Froggy Trades. Whole bunch of great traders out there. Froggy Trades, another great one. Guy's fucking out there on Twitter. That's his vehicle. That's Don's vehicle. That's Alliant Capital's vehicle's Twitter. They do a great fucking job. Those guys are great to have up on your screener. Abso-fucking-lutely. Love them. And I don't really care if any of these guys are trading or not. These guys give me signals. These guys are backing up theses or going against my thesis. My thesis is we're going up, and those three guys say we're going down. I take pause that those guys say that. I think about that those guys are saying that. Did you ever hear the rapper Payroll Giovanni from Detroit? No, have never heard him. Never heard of him. Let me write that down, though. Hold on 1 second here. I'll have to check that guy out. I didn't know that Benzinga had an office here. I didn't know there's probably people in this stream that fucking probably work for Benzinga. I kid you not. It's likely probably somebody in the stream that works for Benzinga listening in. I didn't know they had an office in Detroit. That means I probably see a bunch of these guys fucking around in town. I'm going to have to wear a Captain Jim James shirt out. I go out sometimes in Detroit, some places where the power movers of Detroit go out to. Maybe I'll wear a fucking suit with a Captain Jim James t-shirt and see if I get picked out. Who's this guy's name? I'll try to look this guy. I'll try to reach out to this guy. What's his name? Hold on. Where is his? Who are you guys talking about here? What was this guy's name? Giovanni. What? The fuck did I see that Giovanni shit? They have a morning show? No shit. I didn't know they had a morning show. I probably have to meet him and buy a bunch of shouldn't say that. That's not true. I'm just fucking around. It's just a joke. Payroll Giovanni. I'd have him on the show too. Payroll Giovanni. I'd have him on the show. Oh, look at this. Ooh, liquidity. Be careful here. What's going on here right now? We got some news coming out. We got some liquidities leaving the market briefly. Be careful. Hold your underwear here. Hold your underwear up here. It's only 1 p.m. We got a monthly budget at 2 p.m. That's all I can see. Let's see if I can see something on the juice here. Is this Yellen maybe? Yellen, nope, that was at 10 a.m. I can see her blabbing. Be really careful here. Watch out for a liquidation break. Something's going on. Is there any news coming across the wire? I got to check right now. Got to check. Hang tight here. Oh shit! U.S. crude falls to $3 to $68 a barrel. I'm not seeing anything else. You guys see anything else? Dude, what the fuck is Jedi doing right now? Jetty's going crazy right now. ESF fair value to SPX March 1 2 highs 46.92.50. Nice. 46.96.25. Dude, Jetty's doing it right. I'm gonna write back to him. Thanks. Hold on. Thanks for the thanks for the SPX price difference. You guys see anything out there right now by chance? Is anybody out there know if there's anything coming across the wire right now? Well, tell Alliance I said hi. Matter of fact, tell all those guys I said what up. Something's going on right now. I don't know what it is. I don't know what's going on in the news right now, but the fucking market just went black right there. You see it? Whoa. Something's up. I don't know what's up, but something's up. Is that buns really? I've never, even when you see buns, I never see it like this. I never see it like this. Could be buns, but I don't never on Bookmap. I never see it like this. That much dead space. That's unusual. Thanks, Barry. Appreciate it. What's up, Stacy F? Oh, we got a bunch of stuff here. Hold on here. Sunday never ends, right on. Captain, if you like stats and probs, start listening to Tom from FX Evolution. I like Tom. I used to listen to him. Tom was one of my nightly religious things I would watch. I still tune in every once in a while. I just don't have the time anymore to tune in, but I like Tom, by the way. I fucking love that guy. Fucking guy's a banger. That's FX Evolution at nighttime. Barry's telling me to watch him. I like him a lot. I like Mike Silva too. What I like about Mike Silva is that he does great technicals and he's a great I don't know, I'm trying to like see what kind of or kind of videos he does, but I want to call him like a chartist, but I think that's not doing him a service. What else do we have here? I listen to FX Evolution of the Maverick. I love Maverick of Wall Street too. Here's another thing. Maverick of Wall Street. I fucking love him. Even though he's a bear, I fucking love him. I wonder if he comes from Hollywood. The guy's production value is dude, that guy's doing like a TV show level production value. I'm surprised he doesn't have a show yet. Like on CNBC or something like that. The guy could have a show on Bloomberg, TV, like, you name it. Fox Business News. Do like a late night Maverick of Wall Street show. That guy's fucking phenomenal. Of all the shows on YouTube, best production value, king, Maverick of Wall Street. Oh yeah, baby, get that back up there. Oh yeah, oh yeah. What up, Dat Lee? How you doing, brother? Yeah, definitely recommend. I recommend Tom too, and I like Maverick of Wall Street because there's like I enjoy it. I just enjoy listening to what he has to say. I agree with a lot of what he says, even though the market does its own fucking thing, right? Like the old school. I used to be a bear a long time ago, and he fucking rang my bell, man. He rang my fucking bell. Still to this day. I just can't drink the Kool-Aid knowing that it's real, but I love it. He's got good trades too. Oh, is this it? Israel's offering a truce deal. Yeah, that's what I would call it then. Technical analysis with Da Silva. I love Da Silva, by the way. I still stop in and watch his show. He comes on the show here every once in a while. Da Silva's. I'm a believer in Da Silva, hands down. You have to pay to get his videos. I didn't know that. I didn't know you had to pay for his videos. The videos that I watched on YouTube, I used to watch them. I don't watch them anymore, but I don't have time. I don't have the 3 or 4 fucking hours at nighttime to do my. You guys all have a routine every day. I know you do. You wake up in the morning, you read your morning briefs, right? Then you come on to the Twitter or Stock Twits or Wall Street Bets, do your fucking shit posting, check in with the people you want to check in there. Then you come on the market, you fucking watch a live stream while you're trading. Then when you're done, you go out and drink, party, fucking eat, drink some tea, some dinner, whatever it is. And you go on to your nightly streams at 9, 10, 11 o'clock, right? Bob Kendall, another guy that I love. The GOAT. Don't forget the GOAT, man. The fucking GOAT, dude. Love him, too. So Israel's offering a truce. That's got to be it. I think it's the truce, dude, not the buns. It could be buns, but I'm betting it's something else. That right there on that little, like, this doesn't look like an auction. And that right there looks like they were waiting on unknown news to the market into banks, like major unknown news. And they were probably panicking there for a minute. What's going on, Datley? I appreciate you becoming a member, brother. Chase is here. Hey, Chase, how are you doing, man? Chase, what's your take on tomorrow? So Chase is a perma-bear. So let's get the perma-bear's take on tomorrow. What do you got for us, Chase? And I'll read it on the stream for the Twitch viewers. Don't go crazy all day long. You get 5 minutes. Go. Yeah, I see people are saying bond auction, but then someone else is saying that there's a truce being offered. Chase, you got your 5 minutes, bro. I'll read it on stream, or you can call me. You got my number. You can either call me or we'll do it on stream. Hey, listen, I got to be honest with you guys. Chase is a good trader. He's come a long way. I got to say that. I want to tell you, I've known Chase here for a long time. He's perma bear, but he trades big. He goes heavy. He makes a lot of fucking money. I know that I don't agree with him a lot, but I'll give him 5 minutes. Like I like Chase. I always like hearing that counterpoint, that a counter argument. I have no problem listening to it. None at all. So if you're still here, somebody go find Chase on social media. Bring him back here. So we can hear what he has to say. I always like that counter. We do well with each other. Whenever Chase is like, sell it into the depths of hell, and I lean in, and like Chase will be going bananas in the fucking chat. It'll be like 3:50 in the afternoon, and I'll lean into the chat and I'll go, "Did you close your shorts, Chase?" And he's like, "God damn it!" And he closes. We do well with each other. All right. Okay, so I gotta get off the goddamn stream. I'm gonna leave the stream up. We see anything crazy happen, right? Start hitting these tops up here. We start breaking down through the hourly trigger. I'll be back with you. I'm gonna put the news squawker on. I'm gonna put CNBC on. I don't want you to know that I will be with you tomorrow morning, bright and early. Normally on these rate decisions, I'm here at 10:30 because it's such bullshit in the beginning. I don't want you guys losing all your money, but tomorrow I'll be here 9:30, committed to you all day long tomorrow. Now, Trader Podcast offered to make a intro video for us, but I have to sing and come up with some questions. And he was going to do a deep fake with Jerome Powell. So let me ask, before I get off, I'm not that fucking smart and I'm not that fucking funny. So I'm going to reach out to the community right now. I'm going to ask you to think about if we were to do a deep fake of Jerome Powell, that we'll play it on the stream and post it on. Matter of fact, we'll post it with a group of us, with Trade the Trigger, Trader Podcast, and myself, and we'll post it for when we launch the live stream. So when we post the links to the live stream tomorrow, we'll post that if we can get it done. If there's enough time for it, we might be too late to get it done. Trader Podcast we might be like, "What are you doing to me?" But I'm going to ask you. We're going to try to throw it at him and see if we'll get it done. He's going to be pissed. If we were going to pretend we're going to do a Q&A with Jerome Powell, what kind of insolent questions would you have? Follow-up questions, funny questions, important questions, and what would your responses be as well? If you were Jerome Powell telling us to go suck a ball or whatever. If you guys have anything, or think about it, and we'll talk about it at 4 p.m. We can do that as well. Doesn't matter if it's small, tails matter. Who do you got here? Iron sharpens iron. No truce offer. Not in my news. I'm reading videos of rocket sites being blown to smithereens instead. So there's no truce offer right now. Shaq, what's going on, brother? Cap, I'm homesick with my kid and it's telling my teacher. He said that is one of the words. Oopsie, I'll stop swearing today, Shaq. I got it. No swearing today, bro. Hold on, let's see what we got here. I'll come up with the questions if you guys don't. You guys have any questions for Jerome? You guys don't want to be a fly on the wall? I'll think of some questions, Trader Podcast today. I might have to go to my boy Quinn and find out if he can answer. I got to call you. I'll be right back with you guys.
Fabletics.com.
Welcome back to The Exchange. Shares of the medical provider Centene up over 4% on its annual investor day. The company raised its 2024 adjusted profit forecast and authorized an additional $4 billion to the $1.2 billion remaining in its previous stock buyback program. Still, shares are down about 6% this year, as you can see on that chart. For more here, let's head over to the New York Stock Exchange, where CNBC's Bertha Coombs stands by with Centene's CEO, Sarah London. Bertha.
Thanks very much, Tyler. And Sarah, thanks so much for joining us. You know, one of the big issues that people have been looking at this year, you're the nation's largest Medicaid insurer, has been states dropping people off of the Medicaid rolls now that the pandemic public emergency has ended. What are you seeing, and what are you seeing with regard to those people being able to gain coverage on exchanges?
Yeah, this has obviously been a huge focus for us for over a year as we prepared for the process that formally kicked off on April 1st. Our priority has really been working closely with our state partners because it is a massive undertaking for them, and leaning in to figure out how we can help them ensure coverage continuity. And so we are seeing some of those administrative disenrolls. We're seeing roughly 25% of members who come back onto the rolls because of procedural drop-offs. So we've been trying to help actually make that process more efficient. And then we have been able to also help members move over into marketplace products in order to preserve that coverage continuity. And so we're seeing that as an industry, we're seeing that from Centene's perspective, and we think that that ultimately is going to drive better health outcomes because those members have consistent access to care.
One of the things you told investors today was that you see yourself as a platform of growth when it comes to government-sponsored health care. You already stand high on the hill when it comes to Medicaid, high on the hill when it comes to the exchanges. You have 1 million members, and you're really trying to climb that hill when it comes to Medicare. What are you looking at next year, particularly since you had gotten lower scores from the Centers for Medicare and Medicaid going into 2024?
Yeah, so as we said, we believe that the three pillars of Medicaid, Marketplace, and Medicare are core to our platform. We think they are all three really exciting growth opportunities. And our focus in Medicare has actually been pivoting to a historic focus on serving that low-income, complex senior population that's consistent with the sociodemographic population we serve in our other two lines of business, which allows us to leverage the local core capabilities that we have there into serving this more fragile, complex, dual-eligible population.
I don't notice you, though, advertising like some of your larger competitors as much.
Well, so reaching those populations is a little bit different. We're definitely advertising. We're finding the right channels to meet those members. Those members also typically purchase through brokers, actually through mail order. There are different ways to reach the dual eligible members. So we've been really refining our distribution strategy against that target population.
And the big switch you're making next year involves your pharmacy benefit contract. Mm-hmm. You have switched from CVS Caremark to Cigna's Evernorth, formerly Express Scripts. How is that going, and what are you going to gain from that switch?
Yeah, well, we were really happy to be able to take more than $40 billion of pharmacy spend out into the market in a competitive process. Obviously chose ESI. We've been working on that implementation all year. We've hit all the milestones. We actually had an early go live of one of our states in October that went really smoothly. So we're excited for that 1/1 kind of big bang that we have coming up. And for us, some of it was a fundamentally different cost structure that we could acquire to the benefit of our customers, our state customers, and obviously our federal partners, but also the level of transparency that we know that our customers demand, and seeing through contracts and understanding what the pricing strategies are. That's been an important thing for us because of the role we play in government-sponsored healthcare, and then innovation. And so those were part of the criteria that we evaluated, and CVS has been a great partner to us during the transition, and we're excited to move forward with ESI.
You know, we've got a number of really innovative drugs that are coming on, and just this week we saw the approval of a drug to treat sickle cell disease. And more than half of the people who are affected by sickle cell disease in this country are on Medicaid. But with these drugs priced at $2 million, how are you going to try to help provide access to these patients?
Yeah, so what I would say in general is my hope is that all of the stakeholders across the industry really step up to design ways to make this accessible and affordable, because that's what we should do for things that are curative. We know the cost benefit, we know the life benefit for those members, and so we are working really closely with our government partners to figure out what mechanisms there are to, again, make this accessible and affordable. And we have best practices from past examples that I think we can lean on.
But can you really afford that all in one swoop? I mean, in 2024, is that priced in?
I don't think it all comes in 2024. And if you look at how Medicare actually treats these drugs, there are mechanisms by which we can actually bake those into the rates going forward. But again, finding the right ways to pool the purchasing power and pool the benefit, because we really should be focusing on what's the best thing for those members.
Sarah London, thank you so much for joining us.
Thank you.
Tyler, back to you.
All right, thank you both, Sarah and Bertha. Coming up, a decision of epic proportions. The antitrust case against Google in San Francisco could lead to massive changes to its Play Store. We'll discuss what those could be when we return. We'll be right back. Welcome back to The Exchange, everybody. Time for some show and tell, where we show you a chart and then we tell you the story. Shares of Choice Hotels down about 10% since mid-October, when the company first revealed its buyout offer for Wyndham Hotels and Resorts. Now, Choice is launching a hostile takeover bid for Wyndham, appealing directly to shareholders there. But would a takeover be approved by federal regulators? Here's what Choice Hotels CEO Pat Pacious told Squawk on the Street this morning.
When you look at the hotel services market, the combined share of the two companies is only going to be 17% of the rooms. And those rooms are owned by small business franchisees who control their own pricing. So the consumer is not going to be impacted here. The franchisees set their pricing and their pricing strategy. This is not the dollar menu or $5 footlongs. Our franchisees can set their pricing as they see fit.
All right, let's go to Pippa Stevens now for a quick CNBC News update. Hi, Pippa.
Hey, Tyler. Israeli Prime Minister Benjamin Netanyahu posted a video today rejecting the idea of Palestinian Authority rule in Gaza. The video on his official government account said that he will not allow the Palestinian Authority to take over once the war is over. This is in contrast with the U.S. position. Netanyahu said he appreciates the support from the U.S., but that this is where they disagree. A newly declassified U.S. intelligence report said that the war in Ukraine has had severe costs for the Russian military in both equipment and troops. The report assessed that about 315,000 Russian troops have been killed or wounded. That's nearly 90% of the pre-invasion ground force of 360,000. More than 2,200 tanks and one-third of its armored vehicles have also been destroyed. And Delta passengers were stranded overnight on a remote military base in Canada after the plane made an emergency landing. The 270 passengers switched planes in Goose Bay and waited hours to take off again, but a staffing issue extended the stay through the night. Delta told NBC that it apologized to customers for the inconvenience and will compensate the passengers. Tyler, back to you.
Whenever a pilot says we need to put down and make an emergency, I say you just do what you need to do. I'll wait it out.
You and me both.
Yeah, Pippa, thanks. All right, coming up, it's been a tough year for housing, but not necessarily for Tri-Point homes. Shares there up 65% so far this year. The CEO will tell us how they're attracting buyers, what he sees ahead for the housing market. And as we head to break, here's a look at markets moving higher. All three major averages hitting new 52-week intraday highs. The exchange is back after that. Green arrows, folks.
Else.
Welcome back to the exchange, everybody. The home construction ETF, ticker ITB, climbing more than 50% this year. What a snapback from last year as builders reap the benefits of low existing home sales amid high mortgage rates. Luxury-focused Tri-Point homes among them, shares there up 65% on the year. And while its homes don't come cheap, averaging about a little more than $700,000 per delivery, TriPoint is seeing increased demand from younger buyers, with 2/3 of its customers being millennials or Gen Z. And incentives like rate buy-downs could be what's helping to get those cohorts into homes. Joining us now for more is Doug Bauer, CEO of TriPoint. Doug, welcome and congratulations on the good results. What are you seeing specifically with respect to how rising or high interest rates are affecting the price of transactions? Down a little? Stable? Where?
Well, thanks, Tyler. The impact of higher rates, whether rates are going up or down, and right now the average 30-year fixed mortgage, conventional mortgage rate is about 7%. We have, the new home builders have a distinct advantage really over the resale market with plenty of levers to pull. We can offer permanent, temporary buy downs. A majority of our buyers actually do a permanent rate buy down. As a matter of fact, as you look at our fourth quarter deliveries from our mortgage affiliate this year, 86% of our buyers are locked in at 6.6%. We also can use forward commitments, which is really a fancy term of having some mortgage funds available at a nice rate. We actually have a forward at 5.99% for 90 days. So these are the tools that the home builders use in today's environment. And frankly, I saw the CPI print. I'm not an economist, but I think rates are going to stay where they are for the foreseeable future. And it's a good thing for for TriPoint and the new home builders.
A forward commitment is not a term I'm familiar with, so I might ask you to linger a little bit and explain what it was. It says is it a 90-day loan? Is that what it is, or what?
It's basically securing mortgage funds for homes that would close in the next 90 days. And I can provide you with on a conventional loan of a fixed rate of 5.99%. So it's another financing tool, Tyler, that we use in the new home building industry to attract and get buyers into our homes. By the way, our home buyers typically put down 19%. Their annual incomes are about $187,000. So we deal with a very strong buyer profile here at TriPoint.
I can see certainly why the home builders, such as your company, have an advantage over the previously occupied homes, because those folks may have mortgage rates at 3%, 4%. They don't want to sell. They're locked in, like me. Excuse me. And so the new home is really a great option. But I want to come back to my initial question. Are the prices you're able to get today the same as, higher than, a little bit lower than the prices you were commanding for an identical home a year ago?
They're generally a little bit higher, anywhere from 1 to 2 to 3% on, let's say, maybe around 60% of our communities, 70% of our communities. So the prices have trended up, and it's because the fact that you're making, I mean, there's this locked-in effect in the resale market. And as a result, the new home builders have typically about a 10% market share. Right now, we're enjoying about a 30% market share of all home sales. So that locked-in effect reduces supply. And when you reduce supply and demand is there, pricing will hold steady or gently go up. Interest rates, where they are going to keep pricing kind of where it is. We reported incentives of about 3.8% at the end of the third quarter. And so that's kind of a little bit of a governor as far as pricing into the future, and as far as where rates go. So I've always said rates affect payment and pricing. It doesn't affect demand. So, if mortgage rates go up to 8%, then we'll have to make those adjustments.
Yeah. I think there's been a mythology, perhaps or urban legend, that Gen Z and millennials were going to be slow to come into the market, but you're selling 2/3 of your houses to these demographic cohorts. I assume that they are moving into houses for the same reasons the baby boomers before them, the Gen Xers before them did.
You're right on, Tyler. I mean, and as a matter of fact, the Gen Z are actually buying homes at a younger age than the millennials. There was that old wives' tale, and it's probably some truth to it, that the millennials were staying in the parents, I have millennials that are in our basements. They weren't in our basements. They're coming out, forming households and buying homes. 52% of the millennials own homes. Gen Z, 30% of the 25-year-olds own homes. So that demographic is a huge demand component for the future of housing as we look forward for the next 5 to 10 years.
Those of us baby boomers who may be selling houses over the next 5 years, we're counting on those millennials and Gen Z people, Doug.
We are
counting
definitely
on them.
Yep.
To come in here and help. One other question. Are you mentioned mortgage rate buy downs. Do you sometimes get into the business of helping with closing costs? Is that another way that you can tip the transaction from almost getting done to getting done?
Sure. We'll use a number of levers, as I alluded to, and closing costs, providing some options at no cost or some incentives on that are definitely the case. The one thing that I would like to make a point with you, Tyler, is, when we talk about rates, and there's this whole trade, you mentioned our stock up this year. The home builders have typically traded down when rates go up, and when rates go down, the stocks go up. The one important thing, and I think Doug Yearley and Stephen Kim mentioned this last week, and I think it's an important point for the industry, is that Tri Pointe and our new home builders have continued to deliver results despite higher or lower rates, pandemics, because we've structurally changed. Our balance sheets are leaner, our leverage is leaner. As a matter of fact, we're generating positive cash flow and growing the top line and the bottom line, and actually giving back the cash to our stockholders in the form of stock repurchases and dividends. At Tri Pointe, our book value per share has gone up 15% since 2015 annually. So that's a pretty good trade and pretty good performance. So this rate trade, and how the builders are perceived in this rate environment, I think we've put that myth to bed a little bit.
All right, Doug, thank you so much for your time today, and continued good luck. Doug Bauer, Tri Pointe. Appreciate it.
Thanks, Tyler.
You got it. All right, shares coming up. Shares of publicly traded game makers like Roblox and Take-Two are higher today after Epic Games scored a major antitrust victory against Google. The details and what it means for other apps in the Google Play Store next. And as we head to break, here's a look at some of the stocks hitting new all-time highs today. Booking Holdings, Chipotle, Marriott International, and Costco. The exchange is back after this. Welcome back, everybody. Epic Games, the company behind Fortnite, scoring a major legal victory against Google. Julia Borston joins me now with the details of the decision as well as the broader implications. Hi, Julia.
Well, Tyler, though Google and Epic's battle isn't over, Google says it will challenge the jury's ruling in favor of Epic, but this verdict points to big potential changes for app makers. Google could be forced to change its Play Store fees, which can be up to 30% of in-app revenues, enabling developers to pay lower fees or even avoid paying them entirely. It also could be forced to allow these apps to offer competing app stores, which they would control and profit from entirely. Now, the judge will decide the remedies to Google's anti-competitive practices in mid-January. Wells Fargo saying it sees, quote, Match and Bumble as the most meaningful potential beneficiaries of App Store fee reductions, which ruling does not necessarily suggest immediate term benefit. Expect the market to begin underwriting fee relief. Wells saying that this could also be a positive for Meta because it's been looking to have its users download apps and transact through its ecosystem for a while. Now, KeyBank notes that Spotify, Match, and Bumble have agreed to side deals that offer them more favorable terms than the base 30% fee. So not to read too much into implications for those names, but depending on the judge's decision, they could end up paying even less. And the smaller apps that have not been able to negotiate independent side deals, those are the ones that could really benefit from not having to pay as much to Google. Tyler?
Let me see if I'm understanding this correctly. Fundamentally, the two main places that people access apps are on the Google Play Store or the Apple App Store, right? So
yes, and Google and Apple act as sort of gatekeepers. And if you download an app from them, you then also have to pay a fee, not just, or if you're the app creator, you would have to sort of give a percentage of your revenue and effectively pay a fee to that gatekeeper, which is Google or Apple.
For providing the platform from which your app has been bought. So what are the barriers to entry for those apps to do exactly what I believe it was you described, and that is set up their own platform or their own distribution vehicle or store to sell their app or others?
Well, right now, it's simply against the rules. And that's what this lawsuit has been about between Epic and Google and also Epic and Apple. And that's why Epic, maker of the very popular game Fortnite, is at odds with these two major platforms, which it says have a digital duopoly here. So what's interesting is that's sort of what precipitated this whole thing. Now, it doesn't make sense for every app to have its own app store with in-app purchases, but there are a lot of apps that would really benefit from that. And if you're a game maker and you want to be able to sell add-ons or tools for people who are playing your games, you would like to have your own store within your app and not have to pay any fees to a Google or an Apple.
All right, Julia, thanks very much. Julia Borston reporting for us. Coming up, from AutoZone to Ulta, retailers not so optimistic about 2024 despite record spending over the Thanksgiving shopping weekend. But after Morgan Stanley's retail conference, their analyst says this name should be a standout next year. We will reveal that name when the exchange returns.
So same action as yesterday. You're watching this just straight grind up, get a deep in the money call, and just ride it all the way up. Seems to be the name of the game here, right? Just keep grinding. I do want to tell you two things as we head into the close today. That you could see some risk coming off the table into this close around 2 o'clock usually, 2:30. You could see some risk coming off the markets. So you could see some volatility, not necessarily down, but just realize that you could see some volatility. You could also see a bunch of put buyers come into the market. They more than likely tried to buy puts yesterday. They more than likely tried to buy puts. They're going to try to buy the fucking puts again today. They're going to try to buy 0 dates, 1 dates for tomorrow. At the open tomorrow, they're going to load the fuck up, which I don't disagree with doing that. If you own this market in any kind of fashion, you should have a hedge on the market. So you'd likely see any format of hedging that you can think of. There's all kinds. You can be selling call or selling puts, selling calls, wherever your positioning is in the market to hedge yourself.
US federal budget balance.
So you should see a little bit of that vol come into the close here. So it is 1:50 in the afternoon. You should be getting your trades wrapped up right around 2:30ish. And we're coming into this first rejection point up here, this PT1. So as we grind up into this, you got the second target up here. And then we've got that's 463.90 aligns with R2 as well. And then we have Valhalla to the upside if you wanted a PT3 in case you think we're going to do it today. And that's 465.65. So we'll snap one more line up in here for that one. It's actually higher. And this is going to be our PT3 up here, way up here. Do I think we got this today? I doubt it. We might though. Sometimes we can squeeze up their last 5 minutes or so and get that one. It's on the table. So we'll write PT3 up here. Now I'm going to leave that one down, or I'm not going to leave that one up here until we break through, or if we do break through our PT1. So your first target, PT1, right up here. You should see some kind of a pullback, maybe a check of the 1 minute, possibly even the 5 minutes, and then you're going to have your second attack above at PT2. You know how this rolls, right? As long as we're trading off the 1 minute trigger, we're bullish.
The last time we saw our next guest, he told us it's Amazon and Walmart's world, and
I'll be back with you in a bit.
He's heard from more than a dozen retailers since then and says despite broad inventory normalization and some improvement in margins, retailers of all stripes are still striking a cautious tone heading into next year. But one stood out among the pack, Five Below. That was the mystery chart we teased just a moment ago. Joining us with his takeaways from the Morgan Stanley Global Consumer and Retail Conference's analyst, Simeon Gutman. Simeon, welcome. Good to have you with us.
Thanks for having me, Tyler.
You still like Amazon and Walmart? Do you think they're still just the big gorillas in this marketplace?
Yeah, the message on that last week was that in an e-commerce world, there's two
keep on
behemoths taking most of the share, and that leaves crumbs for everybody else. That's the e-commerce
Keep on
side
squeezing.
of it. I follow Walmart, and they seem to be the big winner in that regard.
You guys see that really
if
clear
e-commerce
on there?
continues to take share at the pace of at the expense
Right
of
there. I'll try
brick
to
and
sneak
mortar,
it up right in there
then
for
yeah,
you.
that's where the top line seems to be growing. Five Below is a little different story. And by the way, thanks for the dozen companies. We had 17 of our retailers there.
Remember, I'm going to be
Five
closing
Below is
calls up
different
here
because
as
they
we
seem
hit
to be
this,
in their own
so
lane.
be
They're
aware
controlling
of
their own
that.
destiny.
Coming into
I know
closing
we've heard
calls
from toy
here.
makers that the toy environment is tough, but Five Below has creative merchandising that drives traffic
Just
into
as we
their
come
stores.
into this, I'm going to put
and
a
they
sell
should be
order
able to
in.
grow closer to their normal algorithmic growth, which is pretty good, mid to high teens EPS growth.
Yeah.
Look for another dip buy after we blast through this PT1 here.
In just a moment, but I don't want to leave Amazon and Walmart. In that e-commerce space, isn't Walmart a somewhat distant second to Amazon?
They are. Mathematically, Amazon probably has 30-40% of the e-commerce market share. Walmart's probably 6%. If you look at the total revenue pool,
48 cents.
Walmart still has a
that
bigger
little tick
overall
right here. They
share
just
of
shaved
U.S.
$3
consumer
fucking pennies.
spending.
Right.
Really?
So now Amazon's
$3
doing that
fucking
all
pennies
online.
on that tick
Walmart
right
is
there.
not too shabby.
You
Look,
fucks.
Walmart's many years behind in that regard, and that's what they're catching up on. At first, they went at it with a 1P approach, and that proved to be maybe too narrow of a focus. And now they've expanded to third party.
I should be
they
trading
have forward
futures right
position
now. I'd be
inventory.
making way more fucking money
a
trading
seller
futures
summit
right
in
now.
September, so they've put a big emphasis in adding the marketplace. And I'm not sure Amazon feels their footsteps, but I think they can be heard now.
It seems that an undercurrent of the 17 companies is that
I want to draw your attention here really quick. Look at this chart down below, right?
Five Below.
Look at this chart that I have down below. Let me mute this really quick here.
Stable positive margin outlook, new format.
I'm going to mute I'm going to just to direct your attention down here. Remember, was it a 5-minute chart? Maybe you want to snap that for your at home or something like that. This morning I said to you that the gamma profile into Friday is buy here, sell here, buy here, sell here, buy here, sell here.
Eastern time, we get the
and then we
US
free up
balance
as we come into Friday. This becomes
billion prime minus
weaker so that we can actually blast through into that 472 zone, okay? So just remember, we're just like, you see how we're just grinding up here, grinding, and then they come in and sell us down, right? And then we come back up again. You know the bullshit, right? Finally, the wall breaks and we head up to the upside. Okay.
This company has the full P&L working for itself in 2024.
Quick final thought. I think there have been two stocks that I have heard mentioned the most on CNBC this past year. One is NVIDIA. Okay, everybody knows about that. The other is Ulta Beauty. Where are you on that one?
We're equal weight. We like the company structurally, tactically. Earnings per share look like it's, they're growing, but they're cresting. This is a business that was late to recover, right? Beauty as a category was late to recover coming out of COVID. They've done nicely. Valuation is kind of garpy, so it's intriguing. We just don't see the rate of change interesting enough into 24 as of now.
You created a word there, garpy. I like it. I like it. Very well done. How about a couple of the other big box stores very quickly, like a Lowe's, like a Best Buy, like a Dick's?
I'd say patience. I would say don't force it. Dick's, structurally undervalued. We think they keep a lot of the top line and margin that they got during the COVID period. They are proving the market wrong in that regard. They are doing that so far, but still underpriced. Lowe's, home improvement, I'd say be patient. The worst of home improvement comps or sales are probably in the next 6 months, the fourth quarter and the first quarter. So while the market wants to discount a change of the interest rate cycle, it's probably a little bit too soon.
All right, Simeon, thank you so much. We appreciate your time today. Thank you for that full rundown of all the stores in retail, or big number of them. Appreciate it. Okay, folks, the hour goes by very fast. That does it for the exchange. Coming up on Power Lunch, regional banks had once been leaders in retail digital banking, according to J.P. Morgan, but now the firm is concerned they will fall behind in the AI age. An analyst will tell us the names most at risk. And Morgan Brennan is getting ready. I can't even speak. I will join her on the other side of this quick break. We look forward to that. See you then. Stay with us.
One minute remaining.
All right, welcome to Power Lunch, everybody, alongside Morgan Brennan. Welcome, Morgan. I'm Tyler Matheson. Coming up, we are 24 hours away from the Fed's decision on interest rates. No change in rates expected, but with another tame inflation reading this morning, or relatively so, will the Fed hint at when rates could start to come down?
Plus, AI is transforming everything, including banking. We are going to talk to an analyst who is looking at the regional banks and breaking them into AI leaders and laggards. Names you need to know coming up. But first, let's get a check on the markets with the major averages trading today at multi-year highs, highest levels for the Dow, S&P, and NASDAQ since 2022, led by financials, materials, and healthcare sectors for the S&P. The maker of Fortnite, though, doing a victory dance this morning. Epic Games winning a lawsuit against Google, which could have broad ramifications for the App Store model. Major legal decision there. We've got more on that coming up.
All right, and shares of Oracle are sharply lower after releasing results. The company missed on revenue, and its guidance indicates cloud growth could be slowing. More on that coming up in 3 Stock Lunch. But we start today with the markets, one day ahead of the big Fed meeting. Wall Street digesting another round of inflation data this morning and looking for signs as to what the Fed will do this time tomorrow with rates. 2 guests joining us now. Both think rates are likely headed lower, but not because of inflation. Joining us to talk all things market, economy, and Fed, let's bring in Brent Schutte, Chief Investment Officer with Northwestern Mutual Management, and Kamal Srikumar, President of Srikumar Global Strategy. Brent Schutte, let me start with you. You think the Fed is probably going to stay where it is. You think rates are going to come down next year. It says said in the intro. Why, if it's not lowering inflation?
Because I think you're likely to see a recession. And so to me, inflation is not dead. The Fed is not going to raise early because they don't want to repeat 66 to 82. And I know there was low inflation data this morning, but if you look at the NFIB survey, for example, 34% of small business owners plan to raise prices in the next 3 months. That is the highest level besides the recent period going back into the 1980 time period. You look at compensation plans are still high. The labor market is too tight, which the Fed wants to make sure that wages don't perpetuate inflation and drag it back higher. And I think that means they stick around too long and they keep that liquidity tourniquet on the U.S. economy, which eventually leads to a recession in the beginning half of 2024.
Can we go back to that previous screen that we just had on there for Brent? Because I wanted to get some clarification there on whether you foresee a soft landing or a recession. You see a recession coming, right?
I do see a recession. I see a soft recession. I see one that's not as deep as what people fear. I think it's likely to be soft because the consumer is still in pretty good shape even after you deteriorate a little bit on the consumer balance sheet. And I also see a Fed that can pivot because inflation will be burned out then. And I think they can pivot and hopefully help kind of cushion the blow as you push into the back half of the year.
Sri, where are you on this sort of soft landing v recession argument?
Tyler, 2 or 3 things. One, I think it is going to be a harder landing than what we just heard. And the reason is that we have had substantial increase in the monetary expansion, as well as 0 interest rates being kept for too long a period of time. And from that, when you tighten, you're going to have a pretty serious response from the market. That's the first point. Second, interest rates will come down sharply in 2024. But I don't think it has anything to do with inflation. It has to do with the fact that as the interest rates were increased by 5.5 percentage points over the last 17 months, something is going to break in the system. My top candidates are regional banks. We had the first crisis. I was looking for a credit event for the last year. The first of them happened in March. I think you may have a second or third event also happening within the next 6 months. And that will cause the Fed to cut interest rates as it always had. Even in the month of March, when we had 3 banks failing, recall that the Fed switched over from quantitative tightening to quantitative easing overnight. And if that could do that, if you have a major problem with a medium-sized bank coming up, or if there is a crisis on the commercial real estate area, expect the Fed to react even more strongly, and that's what brings interest rates down. That's what ends quantitative tightening and puts you in the quantitative easing mode. So the reasons causing them are very different from talking about inflation. And the reason, Tyler, is that the last mile, as we keep talking about, is indeed a very difficult one. I have been a student of monetary history for 50 years, and I haven't seen interest in coming down with a soft landing.
Okay. Brent, You're both basically saying that you anticipate recessions next year, maybe one steeper than the other. Brent, it raises the question, are markets prepared for that possible outcome in 2024? As an investor, how do you position yourself for it?
No, I don't think markets are prepared completely for that. I think large cap stocks, for example, have been the hiding place of many investors who now don't believe there's going to be a recession. I think the recession will actually cause some consternation and some declines there. I think the good news is that more economically sensitive parts of the economy, small and mid cap asset classes, have discounted some sort of recession. That does not mean they won't falter during the recession, but I think longer term investors should be contemplating positioning more towards those, especially in the event of a recession, because they trade at 12 or 13 times earnings that have already been marked down some. And so that's where I think there's some good news. Plus the reality, I think we both agree that bonds offer value at current yields because we do think that a recession is likely, and that will be the impetus for rates to push lower in the coming quarters.
Sri, is that how you see it? Is fixed income the place to be right now? And if so, where specifically?
I've been saying since we were at the 10-year yield was at 5.02, the peak in October, Morgan, that it is a great time to enter in and you're going to get a capital gain from it. And even today at 4.2, after the rally that we have had, I think fixed income, long-dated fixed income looks very good. Short term, the 3-month, 6-month treasury bills are a great place for you to park your cash rather than be in a bank deposit. So you have a twin situation here. On the one hand, fixed income is very good for investors. Equities face clearly a headwind. Second, on the other hand, in terms of banks which are looking for deposits and paying a very low interest rate relative to treasury bills, they are still at risk. So that's why I think anything risky for the banks is going to be very positive for treasury yields and for capital gains. I don't see equities gaining much from this area at all.
Okay. Kamal Kumar and Brent Schutte, thanks for joining us and kicking off the hour with us.
Thank you, Morgan.
Thank you.
Bond yields are flat today following the CPI data and ahead of the Fed decision tomorrow. Rick Santelli is in Chicago. He's watching the markets. He's in the pits. He's got more.
Yes, Morgan, I'm always watching the markets. I was particularly interested in the year-over-year core in today's CPI. At 4%, second month in a row, well off at 6.6% historic high. As you look at the chart, there's no arguing it's come down. But the issue is, if you open the chart up to a 5-year chart, two things should jump out at you. Today's 4% is the lowest in 30 months, May of 21. But that also means it's been 30 months since this metric was under 4%. So it is still running on the warm side. And we saw on the monthly numbers that core was up a tenth hotter, as was headline. Now, if you look at a 30-year bond chart, you'll notice at 8:30 Eastern, rates shot up on the warmer CPI. And you'll also notice at 1 Eastern, rates moved down because we had a much better 30-year bond auction today than we did the last time we had one, because the last one was a disaster. This auction was the best of breed. 3s weren't very well received. 10s was below average, but 30s was slightly above average. And I do think auctions are going to continue to be a feature because I think debt and issuance will continue to be features. And if you open that 30-year chart up for 1 week, you should notice that we're about 10 basis points off our intraday cycle low test, and that was at 520. We're currently trading at 530. Tyler, back to you.
Rick, I want to ask you the question I should have asked you an hour ago, and it didn't come into my head in time. The month-over-month number went, let's see. It went up a little bit on CPI, but the year-over-year number came down. Explain that to me. Is that because fuel prices came down, or is that because a high number a year ago fell off the measuring period?
You know, it's actually a little bit of both. Year over year is definitely affected by 12 months ago. Right. But we do see that headline was up a tenth. It should have been unchanged. So the year over year headline did have a warmer aspect to it. And that is the only metric that was less than last month. So you're absolutely correct. But the other issue is that we're at 3% in this metric in June of this year. So even though it was a bit cooler It's been even cooler than it was today. If I was looking at all these numbers today, Tyler, I wouldn't be nervous about inflation, but it certainly isn't better than the report in November.
Yeah, it's not like spike the ball in the end zone great, right? Yeah.
Exactly. And I think that, once again, thank you, Steve Leisman. He liked me calling it kind of a Rorschach because almost every guest that we've had on today kind of liked today's numbers. And I'm not saying that inflation's looking super hot, but it really hasn't changed much to the downside. And if your target's 2%, I'm sorry, 4% doesn't equal 2%, not even with new math.
No. And he also complimented you for being a tough grader, which is a very nice thing. Rick, thanks a lot, man. Rick Santelli. All right, hope for a landmark deal to reduce fossil fuel use has hit a roadblock at the United Nations Climate Summit in Dubai. Let's get to Di in Dubai. Hi, Di.
Hi, Ty. Yeah, look, it's just after 11 p.m. here at COP, and we're now being told there will not be a new draft of the climate deal tonight. The last version released late Monday totally dropped language to phase down or phase out fossil fuels. It just said countries should take action that could include reducing their production and consumption of fossil fuels. This is a major blow to those who expected ambitious action to slow global warming. Reactions flooded in immediately. Representatives from governments, policy groups, NGOs. One called the text a nightmare of weak proposals and internal contradictions. Former Vice President Al Gore posted on X that this COP is on the verge of complete failure and that the deal reads as if OPEC dictated it word for word. He went on to say, it is deeply offensive to all who have taken part in this process. Now, late this afternoon, there was a protest here on the COP grounds. We have not seen much of that at all in the past few weeks, even with 70,000 in attendance. But the frustration is clearly raw here tonight. The COP28 presidency, which is led by Sultan Al Jaber, the CEO of the state-owned oil company ADNOC, called the draft a huge step forward. To that, one analyst responded, I'm not sure which direction that step would be in. We have not heard from Jaber at all today. Tyler?
If I'm remembering correctly, next year COP is in Azerbaijan, which is also a heavily petrol-influenced state. Is there any controversy over that?
Yeah, well, expect that to start soon. The focus, of course, is still here on this COP. The next COP is not, in some minds, as important as this one. This one was all about something called the Global Stocktake, which was a report card on the Paris Agreement that's required every 5 years to see if the world is getting close to that 1.5-degree goal of warming after industrial levels. And that report card was an epic fail. This COP was supposed to be a reaction and action to that global stocktake. So really, it's all about this one. The next one, not in anyone's sights right now.
All right, Diana, thank you very much. Diana Olick reporting.
Well, coming up, an epic loss for Google. A San Francisco jury finding it maintained monopoly power through anti-competitive conduct. We're going to break down the results in Tech Check next. And do regionals need to bank on AI? Why one analyst says those stocks will lose market share if they don't adapt to the new technology. Welcome back to
Please,
Power
just
Lunch. The maker of
fucking
Fortnite
trade the
flawless
yellow
victory over
bar.
Google in
Please,
court.
just
And
trade
the
it.
decision could have big implications, not just for Google, but also for Apple. That's the topic of today's Tech Check. Let's bring in Deirdre Bosa and Steve Kovac now for more. Dee, let's kick it off with you.
So this ruling essentially, it challenges the idea of Google and Apple as gatekeepers, and that in itself is a threat. Luther Lowe has been one of the most vocal critics of big tech in recent years and a voice for what he calls the little tech group. This year he joined Y Combinator as head of public policy, and I spoke to him today in his first broadcast interview in this position. He pointed out that the Epic ruling came from a jury, so they understood the complicated material and they were able to make a decision. He says that could have key implications for the other antitrust cases that Google is facing. Have a listen.
We're learning is that sort of the emperor has no clothes when you actually get into these documents, and the plaintiffs or government are able to unpack the arguments to kind of a reasonable set of humans, and they see how much these large firms have been kind of egregiously putting their thumb on the scale.
Now, he also believes that Apple could be next. Here's why.
The other interesting thing about both of the Google cases that happened this year is that they inadvertently put a lot of spotlight on Apple's bad behavior. And I think the walls are sort of closing in on Apple because the Epic case was all about how Google's self-dealing and kind of treatment of developers with regard to the Google Play Store. That complaint has been primarily mounted against Apple. And I just think that if you come up with a solve for Google, it's hard to not then turn to Apple and say, okay, well, what are you guys going to do?
So Luther was involved in another tech battle that we talked about just yesterday, the blue versus green bubble, Android versus Apple messaging battle. He says that little tech is on the march, and the Epic ruling is another win for that camp. And we've seen more sort of cracks in these walled gardens just over the last year or so. So I think the question that this Epic trial and ruling brings up is how much more is there to go? Who's next?
How is this likely to affect Google and Apple? I mean, is this? I can see how big it is for Epic. How epic is it for Google and Apple?
Yeah. Epic represents a group of so-called little tech. They're not that little, but it's billions of dollars in market cap versus trillions of dollars in market cap. That's why we call them little. But Epic is fighting for something that many others have fought for as well, including Spotify, Match, Yelp, and that is for the gates to come down a little bit. So that's why I say that this really sort of undermines the argument that Apple and Google have these app stores or ecosystems that are supposed to be secure and keep users safe, but it also, the little tech would argue, punishes them by charging them higher fees or taking a cut of their revenue or profitability. So if Epic falls, you could think that others are going to use Epic as for their own arguments to get lower fees that they have to pay to Apple and Google.
And that's where the effect could be snowballing a bit for Google and Apple.
I think, to me, what's interesting about this is Epic has challenged Apple too. The results have been more mixed. In that particular case, a jury was not involved. They both waived their rights, that it was just a judge moving forward with the decision. With this, it was unanimous with the San Francisco jury. And I just wonder how much that sets the stage for future challenges as well.
There's part of it. Well, Google is going to appeal, so this is by far not a done deal. Yeah, we're very early. This is going to take months or years to finally shake out. But you mentioned the Apple case. Supreme Court is going to decide next month whether or not to take up that case. Both sides are appealing that, by the way. Epic wants to win the counts that it lost. Apple wants to win the, I think it was 1 or 2 counts that they lost. So that's all going to be litigated too, potentially in the Supreme Court. If that happens, we'll find out next summer how that plays in. I also want to point out there's a little bit of more difference between these two cases than just jury or just the judge deciding. It's also this idea that Google has painted itself as this open platform. You can sideload apps, meaning you can download apps directly from the internet if you want to. That's true. You can use other app stores. For example, Samsung has its own app store. That's also true. But what kind of goes unsaid from Google is they cut these special deals with these manufacturers to make Google Play, the app store for Google devices, the default for app distribution on those devices.
On an Android.
So effectively turns it into just like an Apple device. So, the contract you might have or, implicit contract you might have when you buy an Apple device, you know what you're buying into. When you buy into an Android ecosystem and they tell you it's open, you can use any app service you want, that's technically true, but in practice, not as true as Google makes it sound. So that was part of the crack in the case that Google had just now.
All right. Thank you very much, Steve. Sure. Deirdre, thank you very much for being with us. Appreciate it. All right, further ahead, playtime over for the markets. Cuts continue across multiple sectors. That would be jobs cuts. Hasbro laying off nearly 20% of its workers. We'll discuss that name and other key movers in 3 Stock Lunch later this hour.
Keep on grinding, don't stop now. Just keep on grinding. Keep on grinding, don't stop now. Keep on grinding. Keep on melting. Keep on climbing the wall of worry. No time. I'm in the back here doing some work. I'm doing a bunch of work for somebody, but I can't look at the charts right now, but I can tell you that we are grinding up into that PT1 and PT2. Keep your eyes on that sell down below over here. This gamma wall that's above should ricochet, squeeze and ricochet right off that. We're going to expect like a squeeze up and then a bloodbath down, and then we ping pong around here until tomorrow. Unless we get some kind of unexpected news. Just grinding higher right now. Hey, where crowd? Hold on. RS, hold on. I got you, RS. Hold on, brother. ERWD. Crowdstone. Sell the fuck out of it. Just kidding. What do you want to know about CrowdStrike?
Welcome back to Power Lunch. Oil down 4% today. Let's bring in markets and energy reporter Pippa Stevens now. Pippa.
So this is because of the latest CPI report from this morning, with fears that the efforts to curb inflation will ultimately cut demand for crude and petroleum products. Dennis Kissler at BOK Financial also told me there's been heavy fund selling thanks to technical weakness, and also this growing sense in the market that the cuts from OPEC and its allies, those voluntary production cuts, just really lack any sense of credibility. And so none of these headwinds are new, but I think what's telling here is the lack of anything positive. And so with all of these headwinds mounting over the past 7 or so weeks, why would you enter this market with no bullish catalyst on the horizon? However, for consumers, it is good news in that gasoline futures are now below $2, on pace to close below $2 for the first time in 2 years. The national
trigger screen. This is CrowdStrike for RS. If anybody wants to let them know. Holding tight here. Upside price targets 255, 275, close 282. $282, and then this top tick up here for your 304. I do want you to know that you're maxing out right now on daily and weekly velocity. So you're either going to see a crazy mad rip with an immediate reversal, depending upon the time that you have in front of you. This is the 30-minute chart right here. So this bar is right here. 220. You have to hold 220, by the way. And trend is dead at 246 and some change. So you can leave that one down here. Green. And this one, green. And boop, boop. What you don't want to do here is every time that you hit one of these, you should reject, right? So we're going to slow this down. I want you to know that in terms, it's bullish, but in terms of that bullishness, you're going to expect, pullbacks along the way, right? Now, if you break the hourly trigger, this is the big bad boy down here. You don't want to. It's fine for you to come down here and bounce and consolidate to make this next leg up, right? If you have to do that at each stage, that's fine. The one thing you don't want to see is any kind of break in rejection of between 220 and 224. Okay, so make sure that you don't see that. And if anything, I want to see a bounce right on 220. 220 flats, okay? 220 flat, come back up, consolidate, and then take out that second high right there. So you might get just this first one, come back down and consolidate. Trend still alive on the daily, but you're a little overbought on that stuff. But otherwise, bullish. High price target, 304. Hope that helped, RS, if you're out there. Ooh, yeah. Bam. And just look at that. Just imagine you just wham, wham, straight up there into the close. That'd be fucking awesome, by the way. That's 30-minute chart, by the way. There's your PT1, there's your PT2, and then you have some explosive moves to the upside thereafter. Yeah, you've got like, this is a two-sided thing on crowd, is like, when the daily gets that bullish, it can have sustained bullishness, even if there's pullbacks. So if you have like maxed out bullishness, it's usually a time if you see daily, weekly, hourly max bullishness, that's plus 50 on all three readings. But even saying that, once we get to daily bullishness above plus 50, what you can see is sustained upside moves. So as long as you're holding that hourly trigger and the daily trigger or intraday, the hourly trigger would be what you're looking for. But then on a weekly basis, if you did have a pullback and you were consolidating on the daily trigger and you gave time for the momentum of hourly trigger to catch back up to it, get underneath price, then you could then attack those last two upside moves. What do you got going on over here? Cap rolls benign, tough for a squeeze. Awesome. I gotta be honest with you guys. I gotta do what I'm doing. I can't. I gotta be 100% honest with you guys. We will never launch. I know it's not your fault, but I gotta be honest. We ain't never gonna launch. So I gotta get back to what I'm doing. It sucks to say that, but there's never a right time. I gotta be honest. Never a fucking right time. There's always something happening.
January futures
I gotta launch. I'll tell you this.
NYMEX gasoline.
I'm gonna say this.
January futures settle at $1.97.
If I don't get this stuff done right, We don't get a $65 level or $59 level or a $50 level. We only get the 150, 100 level. So I'm really doing this for you guys. So I'll be back with you guys soon. Or at least people that poor traders out there. I'm trying to get this for poor traders if possible. I don't mind paying $100, $150. I've paid $500,000, $600,000, $700,000 a month. But I can see that some of you out there, they're like the loudest voices in the room, can't afford that. So I'm trying to do this for them if possible. Oh, yeah, baby, look at that. Squeeze it up now and touching that yellow bar. There's your first target. If you want to take the money right there, so be it. Congratulations if you followed the trade all day long. You made some money today. Now we're going to be looking for some kind of an either squeeze up, consolidate, let the 1 minute catch back up, pull it up there, possibly a liquidation break to pull it up there. Personally, I'd be looking for any kind of pullback in here, rejection here, blast down, and looking for a dip buy right about here. Consolidate, and then you get your leg up. 2:32 in the afternoon. They pulled some funkiness yesterday where we had a we had the first or second target, then PT3. Yeah, dude, I agree, man. Who just said that? I agree. I really got to work on this stuff. Whoever said that, please launch. Look, a lot of you guys are asking for stuff in the chat. I love all of you, but it just delays and delays what I have to get done. I love all of you. Please. I get it. I get what you're saying out there. I love all of you. Please. I gotta get this done. As a matter of fact, if you guys wanted to, you could probably find I think right now that I think Binky and David AMS have access to it right now. So if those guys have access, if you ever want to reach out to them, be like, hey, can you just chart this out for me or show me a 30-minute chart so I can know where all the levels are, my favorite ticker? Those guys might be able to help you if you be nice to them. But I got to get this stuff done. What am I called? An empath or something like that? I feel like I forget what they're called. It's when you help people. That's part of my personality. If you need help, I'm there to help you. If you need this, I need to help you. But the fault of that is that I don't get the other work done that I need to get done. It's not your fault. It's mine.
On that licensed content, and I think it's probably a win for them that over half is just over half is now their originals.
It does seem like investors are grappling with these new metrics. I mean, the stock's only up fractionally right now. As you break all of this down, Julia, what does it do? Does it have?
I'm going to also push this bar back now that we've hit it, so that you can see the price action.
To have greater disclosure like this.
I don't know if it has a direct impact on the cost of content, but I think it might impact the way that analysts model their expectations for Netflix. I think the fact that this is not a company that's reliant on just a couple of big hits in every country. This is a company that has really dispersed.
You guys are hilarious. I'm reading some of your texts right now.
Thing for Netflix. And if you look at what has really driven the stock's growth this year, it's the success of the crackdown on password sharing and the fact that they know that they could charge more, they could get people who were freeloaders before to start paying, and people would keep watching. When you see numbers like these these hundreds of millions of hours watched, it really explains why people are willing to keep paying if they or to start paying if they'd been getting it for free, or to pay more if Netflix raises prices, because they do have that incredibly intense engagement. Just those numbers are just massive.
Yeah, value proposition. We're going to start looking for some of those analyst reports now that we have these metrics. Julia Borston, thank you. Still ahead, cashing in on AI. Banks are using cutting-edge technology to expand their business models and bring in even bigger bucks. We're going to discuss when Power Lunch returns.
Yeah, I'm an enabler.
NBC.
Welcome back, everybody. Generative AI generating opportunity in the labor market, with job postings climbing 6,000% this year. Kate Rooney has more. Kate?
Hey, Tyler, that's right. So workers want to get in on that buzz around ChatGPT and generative AI. There's been a surge in interest in AI-related jobs. It's according to Indeed. Searches that include AI were up 20-fold. The CEO tells me there's not nearly enough jobs, though, available to keep up with that demand.
So there's about a 500% increase in the number of jobs that mention generative AI. There's about a 6,000% increase in the demand from job seekers for these jobs. But there still is, I think, a mismatch the other way, in that the total amount of demand for AI talent far outstrips the number of AI professionals.
It is still a small subset of overall job searches. It's less than 1% at this point. Indeed, also pointing out a surprising resilience this year in that labor market, despite recession predictions and then the Fed's tightening, even in tech, where we've seen waves of layoffs and steep valuation.
Oh boy, they are
workers have largely
squeezed.
been able to find open positions.
Every
Certain
last
areas,
seller
though,
out right
not holding
now.
up as well. Software development job postings down 51%. Information design down 44%. Mathematics down 40%. These are also sectors that boom.
They're just straight squeezing out all these bears right now. There's so much pain here in this trade. It's gotta be. I feel bad. I really do. I can't imagine like who's getting squeezed right now. I can't imagine being like a retailer short and the squeeze that's happening. You're gonna hear people out there that'll say like, "Oh, they closed all their shorts from a long time ago," but oof, like there's probably pain going back to, there's probably going. Some of this pain is probably going back to early March. Nice, good job, Jay, for the update. So very successful bond auction in the 30-year, integrated an A+. Thanks, Jay Shady. I appreciate that, brother.
Mathematics, those are things that go hand in hand with generative AI, and it is sort of a broad term, right? If you can interact with generative AI, if you can.
No worries. I love all you guys out there. It's just that I got this stuff I got to do. Like I got a list, like a laundry list of crap that, like I got I'm trying to do something where, I'm trying to do this one level where, we cut out a lot of the YouTube and Twitch subscriptions, and I don't know the workaround right now. And so it's like there's a bunch of crap that I'm doing in the background for you guys, or for us. Anyways, it's bullshit, but it's just like grinding, like, oh, I forgot that. We forgot this. We need that. We changed this. We don't have this. This guy didn't deliver this. This female didn't deliver this. Male didn't deliver this, whatever. Just like, it's like nonstop fucking never ending. I'll be back with you guys. So you got PT1, you got PT2 up here, and then you get the big squeeze. Always keep your eye on this down here. Keep your eye on this down here, okay? Because this acts as a magnet, but it also acts as a repellent until we can work our way through all of this wall here, right? So just make sure that you're aware of that as we head up here. Sometimes it can come a little bit earlier. You'll see people exit earlier. Just keep your eyes on this gamma down here, okay?
Yep. Hi, Morgan. So before you even start a conversation on AI, you have to start a conversation on data. And banks sit on a treasure trove of data. But the question is, do you have clean data or dirty data, right? Do you have data that's reliable?
Trust me, you guys want this shit because you don't want to need me here. You guys want to be doing this, so
that's where
yeah, make that one clear there.
Just published a lengthy report
a little
today.
bit thinner.
Most of the regional banks are way behind even on having data ready for AI.
Is that typical of the smaller banks, the regional banks, when you see these moments of major tech adoption, or is this an unusual circumstance given the fact that, and this is particularly true for the regionals, we've just come through this aggressive Fed tightening, hiking cycle that we know has roiled the industry broadly?
Yep. So it's a good question. I've covered the banks for almost 24 years. And for that entire time, people have been saying, oh, with this new technology, the smaller banks will not be able to spend enough, so they're going to fall behind. I have heard that for years, and I've challenged it.
Brent crude futures settle at $73.24 a barrel. That's down $2.79 or 3.67%.
Right? That's been my view up until now. That what the smaller banks use is what we call a fast follower approach. They let the large banks spend a lot of money, whatever works, the vendors eventually supply that to the small guys, they catch up.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Use Pro for a year's worth of our service for the price of 1 month and save 92%.
That fast follower approach, and they're falling behind. They're already behind.
How do you measure who's naughty and who's nice on this metric? How do you know who's doing well?
Yeah, well, that's a good question, Tyler. And it's not, there's all sorts of benchmarks out there. Even though we're talking about AI, you have to use RI. You have to talk to these companies. I mean, we've talked to, for almost every bank we cover, their CIOs, their CTOs, and most of them are fairly transparent. Like, hey, we're behind. in our journey. And if it's a bank that's undergone an acquisition the last 2 years, has been worried about an integration, right? We want these two banks to come together. They're even more behind. So it's actually the old-fashioned way of aggregating information.
So let's name some names. And I guess just as importantly, is there an investment thesis right now around these names? Would you buy or sell based on what we're talking about?
Yeah. So even though I'm suggesting that most of the regional banks are very way behind in the AI age, right? The two that are leading, in our view, in terms of having clean data and a great AI strategy are Cullen Frost and Live Oak Bank. What do they have in common? They're mission-driven banks, and they're planning early. How are we going to use AI? You ready for this? Not to take out costs. They'll have cost takeout. How are we going to improve our customers' lives? That's how they're approaching this. Most of my banks right now, because if you look at the revenue environment, it's pretty rough. So what are most banks guiding the investors to expect? We're going to cut expenses next year at the worst possible time. They're behind in their AI strategy. They're behind in their data strategy, and they're cutting expenses. These banks are investing in their business. And I believe what's going to happen is you'll have a small subset of leaders start to emerge, right? Really accelerate the customer experience. They're taking costs out. Their revenue's improving. Their valuation multiples improve. And what will ultimately happen? I think we're going to see a consolidation wave in the industry that we've never seen before.
Interesting. I loved when you said, what are they doing that they have in common? That is, they're thinking about ways AI can make the customer experience better. Give me an example. Yes. Give me an example of how, just for me, how my life is going to be better because of AI.
Very simple.
Okay.
I've been advocating for the industry. Look, what's financial literacy? 40% in the U.S. Banks should be advocates for their customers. They should be helping them pay off loans early, get a good rate. What are we going to do to make your credit score better? You haven't seen that. You see sky-high overdraft fees. You have not seen banks being advocates for their customers. When you look at Cullen Frost, it's the highest client satisfaction bank in the United States today. Why? They care about their customers. That's job one. And ironically, when you find banks that care about their customers, they have good revenue growth. They have good earnings growth. They end up bleeding on client experience. What you have today is not only are banks behind, they're going to worsen the client experience because they're not going to invest in the technology that's going to take it to the next level.
So the answer, the bottom line there is care about your customer more than you care about your fees, your overdraft fees and so on and so forth.
But the irony, yes, care about your customers more and everything will take care of itself. You're seeing the exact opposite right now.
Stephen, that was fascinating. Appreciate it. Stephen Alexopoulos, we appreciate it.
Good to see you guys.
Good. Shares of Zillow higher on an upgrade at JMP Securities, citing falling mortgage rates and pent-up housing demand. We'll trade the shares ahead in Free Stock Lunch after a quick break.
Drinking OJ, watching Cap bid up the calls. HYG vertical, baby. HYG, though, it's kind of bullshit, right? HYG are racing 3 down days. SPOO's price not reflecting it.
All right, time for today's three-stock lunch, where we take a look at 3 big movers of the day. Here with our trades, Victoria Green, founding partner and chief investment officer with G Squared Private Wealth. Up first, Victoria, we've got Hasbro, toy maker laying off more than 1,000 workers as weak toy sales continue this holiday season. Shares are down more than 3% today. Your trade, Victoria, on Hasbro.
All right, and I know it's a little controversial here, but it's a buy for me. I think all this bad news is priced in at this point. They're at like a 6.5 PE. It's been taken down from 75. You've got a lot of supports here around 42 in those October lows. To me, the stock, this was seen as a proactive move, not a reactive move. They're trying to get back to better operating margins. Newish CEO in 2023, refocusing on higher margin things. Their core franchises such as Transformers and Magic the Gathering and Dungeons and Dragons, they have opportunity and momentum if they can just get some of this bad news behind him, which I think at this point is rip the Band-Aid off, reduce staff, and look to help operating margins. It's a good thing.
Okay, so from toys to tech, up next, Oracle. Those shares are down more than 10% after missing estimates on light cloud revenue. Victoria, how do you trade this one?
Okay, light being it only grew 50%, not 57%, which is what the street wanted. So let's put that in context. It wasn't a horrible quarter, and it was more supply driven than demand driven. Their backlog is now bigger than their revenue, their annual revenue. It's huge. They just need to get some more AI chips in. It's a buy for me. What Larry Ellison said on the call, he said, the demand was over the moon on the data centers. Their partnership with Microsoft is great. They have a wonderful suite. And so I see potential in the stock, and I'm a little bit of a dip buyer here because I think they're going to get more of an AI boost down the road as this backlog gets a little bit easier.
All right, and finally,
no
let's
pullback for me to get back in.
From, one of my wife's favorite pastimes is just to Zillow everything. She just Zillows it all. She'll Zillow you, Victoria. Upgrade from
holy shit! Look at that, dude!
Woo!
Look at that iceberg coming in right there, dude. Be careful,
no,
Bears.
It's a sell for me.
Whoa.
Sell the rip here. I don't see it. I mean, I love playing on Zwillow too. You walk the dog, you go around, you check out houses around you. It's fantastic. But the problem is that market is shifting. Technology is going to change it. You have that NAR verdict, that $1.8 billion verdict against them. It's still got to work through the courts. But that's probably going to change commissions and how some of this real estate industry is being done. Over 70% of their revenue comes from residential real estate, and the NAR owns most of the MLS listings. So if that gets taken apart, how is Willow going to get all of this lovely data that we can search through? So I see a fundamental shift happening in there. And also rates might come down, but they're not coming down to that 3% that people are still locked in. So unless you have to move, a lot of people are going to hang on to their old 2019, 2020 mortgages. 7% still not attractive for most.
I can't tell you the number of conversations that began. That house was sold in 2016 for $1.7 million. Now it's going for $3.8 million. Yeah, that's the way my house is. Victoria, thank you.
I'll look you up on Zwillow.
Little insights there.
Well, baseball star Ohtani just signed a record $700 million contract. So why is he only slated to make $2 million this upcoming season? We're going to explain that on the other side of this break when Power Lunch returns.
I mean, you don't think that's disgusting right there? I mean, just look at that. We got to go over to the on now. Oh, I'm on the wrong screener. Hold on here. God damn it. Jesus. Fuck. Look at that. What the fuck is that? Look at that iceberg. Oh my God. Look at Jesus. Oh my God. Look at that. Oof. Just climbing it all like nobody's business. Reaching for the sky. I wonder where you are. And I was wondering what's going to happen now. It is going to get crazy in here, up there. Oh, dude, look at this. Oh, God, pain. Woo. Whoa. You are short.
We've only got 2.5 minutes left in the show. I'm going to read fast and a bunch more stories you need to know about. Ford cutting planned production for its all-electric F-150 trucks in half for 2024 as EV adoption has been slower than expected. It previously announced plans to postpone or cancel up to $12 billion in upcoming EV investments. This is really a trend that is moving across the entire automobile industry, slower than expected.
It's moving across the automobile industry. Affordability is a part of it. Also, hybrids, very, very popular. And let's not forget that when we talk about all these investments that these automakers are making, they did just ink this very big deal with their workers. So that's probably factoring into the calculus as well. All right. Well, there are now more mortgage-free homes across America than at any other time in history. That's according to the latest census data. Nearly 40% of folks own their homes outright as of 2022. This is the golden handcuffs thing, right? It's not just folks that are sitting in homes, not moving, not releasing inventory into the market because they have low mortgage rates, but because they have no mortgage rates.
Because they're debt-free. They've assembled all this cash. They've paid down their mortgages.
Yeah.
Good for them. All right. A new study found that patients taking Eli Lilly's weight loss drug Zepbound regained about half the weight they shed after stopping that treatment. Lilly recommends patients remain on the weekly injectable if they want to maintain their weight loss. This has been a true side effect, I think, with others as well. Some of the other branded versions of these weight loss drugs, you gain it back if you go off.
This has been the concern with health insurers. You've got high costs involved with long-term coverage of pricey drugs. And this is a market opportunity. This is what like Weight Watchers, WW, a number of startups as well are focused on, is how do you provide an off-ramp for these drugs that's going to help to maintain the weight loss.
And finally, we're learning more about Shohei Ohtani's record contract with the LA Dodgers. Deal worth $700 million, but it's nearly totally deferred money. Ohtani's going to get only $2 million a year for the 10 years of the contract lifespan, his playing time. Then he'll get $68 million a year for 10 years with no interest at all. It's a very interesting structure, but I'm sure Shohei is going to take that $2 million and he's going to probably make 20 or 30 or 40 million in endorsements.
It seems like everybody's a winner here.
Everybody's
potentially.
A winner. The Dodgers get to save money on their deal. Thanks for watching Power Lunch.
Closing Bell starts right now, and I'll see you on Closing Bell Overtime at 4.
All right, thanks so much. Welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make or break hour begins with the outlook for your money, whether a powerful new bull market is just beginning. We're going to ask Schwab's Liz Ann Saunders and Trivariate's Adam Parker that key question in just a moment. And later, a Closing Bell exclusive with the President and Chief Operating Officer of Goldman Sachs, John Waldron, will be with me here at Post 9. All topics on the table: the markets, the economy, the future of the firm. In the meantime, your scorecard with 60 minutes to go in regulation looks like this. We are in the green.
Ooh, yeah. Hold on a second. We got to look at something here. Hold on here.
Pretty benign CPI report today. All eyes now, of course,
Hold on
tomorrow's Fed decision and Chair Powell's presser. Interest rates, they are holding steady ahead of all of that. We're watching that closely
the
too.
S&P 500 hits its highest intraday level
We're
since
gonna.
January.
That's right. That's right. Squeeze it up there, baby.
3%.
I'm missing this part of the run. I should have just stayed fucking long. I should have just stayed long to fucking 4. I was hoping that I'd get a tag down below and be able to jump back in right here. Didn't give it to me. So I'm missing out. I got no 0 dates for this run right now, but it is just going to straight fucking melt up here and just blast off and stag that. I'm looking at Tesla right now. So go tell all your Tesla bros to gather around. All right, so you guys mark on at home what you got there, because I'm going to switch over for Tesla Gang, because I had a conversation with Tesla Gang a week ago. I know some of you know about this Tesla Gang conversation where I said to Tesla Gang, there's a better dip buy, and we are going to review it right now. If you recall last week, they said, what about Tesla? What about Tesla? And I said, now there's a lower price to buy Tesla. And I'm afraid to actually look at the chart right now. And I want to look at it and see what I said, because how far off I was. We're going to look at it right here. And I swore, I don't have it on here. You're fine if you're Tesla Gang. You got no worries here. So if you're Tesla Gang, right, let's talk Tesla really quick. You're all upset. Now let's talk Tesla here. Okay, we're going to go to the trigger screen here. I had it on here. I don't see it right now. For some reason, I don't see it here. But I did talk about Tesla. Am I hiding it maybe? I'm hiding them. Nope, not hiding any drawings. Anyways, we talked Tesla, and a lot of Tesla Gang was saying this should just start squeezing, right? Like upside, all that kind of stuff. And I was like, there's probably a bloodbath somewhere down here. I think you remembered. I think I even said the 230 or 220 or whatever, and you'd actually get your trade up on Tesla. Tesla loves that. It's like one of its best ways that it trades. But let's look at something. Let's look a little bit closer here. Now, we're going to talk some Tesla. It's going to piss off a lot of Tesla bulls. Okay? And we're going to look at velocity. Now, we're going to talk Tesla. My view is this is one of the best tools for Tesla, especially if you're a Tesla bull. Matter of fact, the GOAT has his own zigzag channels that do a great job on this too. So on Tesla, I love always buying down here on these low velocity signals on their daily trigger, believe it or not. Actually see that one right there. See that one right there. Whenever we're on highs and we're starting to rack up a series of lows, I'm wary. Even if we bounce, actually see a little bit of continuation over there, but then the big roll. So let's just talk Tesla. If you are a Tesla bull, basically you had your run, okay? You had your run right here. This is where you should be buying, okay? And then, of course, you're looking for places here for resistance, right? You see one right there. You see that one right there. You know you had an event come up, and you've got the crushing of that event vol and all that kind of stuff. I'm not bearish here in Tesla, and velocity could pick back up, and you could get long Tesla again. But truth be told, where we are, I'd really like to see Velo come back down into the negative on the daily. It's the safest and happiest place for a Tesla bull. Okay, now your hourly is looking good here. Your daily is still hanging on, so bulls have a chance here. So we're gonna start. I'm gonna be patient with Tesla bulls here, and we're gonna talk Tesla. Okay. So on this daily trigger, Go home, write this down, or you'll get the tool later this week. But on this bounce down here, this is positive, right? Bounce on weekly trigger, bounce on daily trigger, all positive. 235.97. Like the stonk. Next one. 233.08. Mark these at home. Draw yourself at home a little box down here, right? Draw yourself a little box on the weekly. Draw yourself a little box, right? Snap a line at home, whatever you're going to do. This is your daily trigger down here. It's reversing, right? You have some positiveness. And then you've got two resistance points here. Your first one is the half-hour trigger. That's at 237.64. Then you have another resistance at 238.94. So for the bullishness for Tesla here, I like this, of course. We're not at bottom of velocity in the daily, so it's not like it's a dip buy that you can believe in at this point. What I would really like to see for Tesla is for it to come above here, right? Squeeze to right here. Watch my cursor right there. Okay? And then come back down and consolidate on this hourly trigger to give you real bullishness to attack to the upside up here. You might actually see Tesla outperform tomorrow. So what I'm going to say to you is this is all good structure here, okay? So what you're looking for, if I pretend we're price here, I'm looking for this big old squeeze, maybe come down here, squeeze up there, come up there, and just, if I can, I'd prefer it to be above, like here. I always prefer it to be above. It shows more bullishness. And then, of course, the hourly trigger comes underneath, right? The half-hour trigger picks you back up over here, and we're off and running again. So if you're bullish on Tesla here, the target is actually higher. It's 241.34. That would be my preference, though Tesla can fail. These fucking sellers always come in early and try to tell you, no, we're going down, brosif. So just, I'm going to make that one yellow for you right there. And you could outperform tomorrow if we pause. So you might be cycling into the rate decision. Now, I'm going to caveat this with you. Tesla bulls are scaredy cats. I love them, but you just like, well, they're like the big FOMOers, but then they're scaredy cats too, right? So you cut, or they get panicky, they start selling. So my point to you is this, is that you want to be above 238.94 to get really bullish. With the fact that daily velocity is already net positive right now and is experiencing lower highs on velocity on the daily basis, you could still be a bear or a bull trap. So still be wary here. But as long as you stay, if at any point you get above that 238, you'd be attacking or have a target to the upside right here at 244.50, okay? And you should enjoy that there. Now, I'm going to warn you here. If you begin to reject and break down below 233 like this, you start seeing that action, get the fuck out of the way. Tesla is going to have a fucking bloodbath. It's going to be ugly, okay? Really ugly. Like, you're talking about erasing this entire move down here. That's $204, okay? So you got to, your first target is 226, but I'm going to warn you, when you this weekly trigger is like trend, and if you break this monthly trigger, that's bear market for the price of Tesla. So 226, that's the pain trade. Get underneath that 226, man. 200, 100, $68. It can get really ugly. So my point to you here is you can tacitly buy a dip right now in Tesla, run this bad boy up, and maybe see yourself a nice end of the week run to the upside here. Do not be long Tesla, though, if there's any breakdown below this weekly trigger here, because what will happen is, will end up happening is you would see this break below. You'd see daily cross below the weekly, and this cross right here, if you get a 6-trigger bear cross, like 6-trigger bear cross, it's going to be nasty. So you must defend this right here. You have to. And you can't be doing this for like 2-3 days. And like next week, you get bearish on Tesla next week. You see that daily cross, the weekly next week? It can get like, it ain't going to be staircase. It's going to be fucking elevator to the downside. So right now you're doing just fine as a Tesla bull, right? So I want you to realize that. So all the doom and gloom on Tesla, they're buying, they're buying, they're buying, they're buying. Just keep on buying this. This looks more like, I know this could probably looks to you like it's a bear flag for a crash down, but this does not look like that to me. This is the edge that you have off of. This is actually an edge on regular retailers. They think that's a bear flag and it's going to blood. And this is telling a different story. You're actually on some major Tesla support. So keep your chins up, buy the dip down here. First target, 245. And then you would be looking for some more consolidation down in here. The daily trigger will come up. The hourly will come up, and then you're going to start to attack the rest of that upside move up here. The only real negative that I can see here for Tesla bull would be that we're not buying it on the absolute bottom. I always like to be a buyer way lower from here. So recognize that you could see some consolidation here, and then you get your push above here on Tesla to 252. So something like this. I apologize for the look of this shit. It looks kind of stupid, and I didn't put 3 little pumps in and all that kind of stuff. But you get the point, right? Wham, wham, and then wham right up there. So if you're a Tesla bull, chin up. If you are looking at our little chart over here, where are we? We got the sell up here. So just be aware as we come into this zone, people are going to try to take profit up here. Does not matter if we squeeze above. You want to take this part of the trade, right? Who are these people? Scared, right? I want to see results, right? These people right here, guess where they step in? Right here, and they get rolled over. You're the guy that's in here. You're the gal that's in here. This is the meat of the trade for you. You want to run this up, and then you could leave some runners on in case we squeeze. Leave 1 or 2 on, or 10 on, or 100 on. If you're trading 1,000 contracts, whatever the fuck it is you're doing. But this is the time for you as a trader to be exiting, right? You got people that are like, not buyer cap, not a buyer cap. I'm a buyer now cap. Right? And what we sell into those people. I want to be honest with you. We sell into those fucking people. So FOMOers, we sell into these people as we squeeze up. Now, next thing, let's say you're like, oh, fuck you, Cap. We're going to go to 470 by tomorrow. Okay, all I want to see is the squeeze up, the consolidation, and then the move higher from this previous high, and I'll jump right fucking back on board with you right there. And I'll run this bad boy up, and I'll meet you at the top when you're buying 470. So terrible saying that stuff. Someone's at home is just like, I fucking hate this guy, but I watch him every day because I'm on the wrong side of the fucking trade. Look at that, building a little base on PT2 right now. What are they building that base for? PT3 to the upside right here. Can they get it? Can they get PT3? We'll find out. Shutting the fucking door, dude. Primal was listening earlier. I told Primal earlier, I was like, there is a door closing here. I'm warning you, if you're not you, but if you know you like your favorite bear out there that's doom and gloom, he's probably sitting at home right now. I don't hate him or anything, but there's a door closing on them right now to downside. Like, even if you get 1,000 points, you get my picture here? Like, even if we get out 1,000 points, you're shutting the door on 3,500. And we're at 4,500 now, trading 4,600. That's 1,100 points, right? The probabilities of going back now to 3,600 are 30%. 3,500 is likely 20% now, 25%. And if we slam up to 470 and 480, You know, that low in October is likely never to be seen again unless we get some fraud. It'd be a big move to go down 1,100 fucking points, 1,200 points. A big move down. That's a bear market basically. I think it is. It's more than 20%, right? I don't know what 480 times 0.20 is off the top of my head. I should, but I don't. I think it's 25%, 26%, something like that. So big moves here. Closing the door. Should I post that? I don't think it's probably unkind to post that right now. It's probably going to piss somebody off on social media. So I'll refrain from that on social media. It's probably not good. Probably not. I don't know. It's not gentlemanly here. So you probably shouldn't post that on social media either. But you're closing the door basically right now. Anywhere at 470, 480, you're effectively closing the front or the door on any argument from a seller that we would revisit or go lower than 3,500, unless we get some fraud. Effectively, you're giving them a very, very low probability of ever seeing that again. I mean, it's a cool thing, but at the same time, you don't want to see fucking, you just destroyed a lot of high follow accounts theses, right? Especially like fin Twitters and stuff. Yeah, so if you're a bull or bear out there, consider that, please. That we will never likely return unless we have a major, like you're talking like fucking fraud, like basically depression, fraud, war, something major would have to happen, bigger than COVID, believe it or not. You look back at the prior lows to COVID, we still hadn't seen any major down prior moves. So you're talking about something bigger than COVID would need to happen. Yeah, no, it doesn't really. If you start looking at like I get the points here. I know we're gonna roll, and the roll is gonna be nasty, but I'm more referencing. So there was a group think, right? Very strong group think of 35 was not the bottom, and we had a high probability of going way lower, but those probabilities start to turn. You know what I mean? It's kind of like saying. We're going to go back to $100 on SPY, right? That probability is like 0.00005 or something. So just this right here is kind of a big moment coming up here to this. What are we at right now? 46.43. It's tough. They get the 47.50. They get the 4,800. How do you make the argument that we're going to go down 1,300 points? That's a tough argument. It's a tough pill to swallow. I can see us going down to 3,600, and it's soon to be 3,800. But they're shutting the fucking door on 35 right now. Oh, you're gonna give me the bounce down here? I'll take it over here. I'll take it right here too. You want to give it to me right here? I'll buy that. They're not gonna give it to me. They're just gonna run it up. I'll take that buy for $1. I'll buy that shit for $1. I double dog dare you. Here is your PT3. You got a yellow bar right there. Yeah, you're effectively. I'm not gonna say it on fucking FinTwit. That hurts. That's gotta hurt people. It's gotta hurt. It's gotta hurt the theses of some major players out there. I'm missing some. Looks like I'm missing Twitch chat right now. It's frozen up on my end. There we go. Yeah, you start like all of these probabilities start to adjust based on price, right? We went over this, man, in December or November of 2021. I think September, October, November, we were going over what the downside expectations were, and we assigned. Matter of fact, you want to find somebody? You should find Joe Donut, because we charted out 2 or 3 years ago, like, what's the probability of 3,500? What's the probability of 28 or 26? What's the probability of 1,600? How do those probabilities change as time passes? Like, there's a higher probability. But when we went into December, January, right around there, we had higher probabilities depending upon the velocity of the downside move in 2022 to like where we would tag. And then as time passed, how those probabilities change. And it's brutal because looking at price here and the velocity moving up from down below, the door is being effectively shut. That we will not see 3,500. A very low probability. Talking 15% chance maybe right now. About a 15% chance. Very, very low. I'd have to look at it again later today, but it's pretty fucking low. And here's another, you want another caveat to this? You guys want another fucked up caveat to this? If they close this quarter above, right, or green, right? They close December green. You're going to get another tick mark on the quarterly, the monthly, the weeklies, all moving up another 100 points and 50 points, 10 points, depending upon what you're looking at on the quarterly, yearly, and the monthly triggers. Monthly, quarterly, or monthly, yearly, and quarterly triggers that are down below. They tick up if we're green. They don't like go flat or anything, go down or anything like that. They actually go up with price. So it's a tough pill to swallow. There's gonna be. I want to tell you guys something. If you guys see like anybody really getting shit on FinTwit, any like super duper perma bears, just stay out of it, dude. Just let it be. Those guys are already fucking livid. Hello, Jerome. Yeah. What do you think about the idea that Biden's gonna fire your ass when the economy takes a shit right before the election? Yeah, dude. True. That's true. That too. That's a good question too for Jerome. That's really all he needs, right? And that's a fair point, Turkey. Make the economy awesome sauce, gets elected, and then he can fucking actually do what he says he's gonna do. You know who fucked me on that? Obama. I voted for Obama twice, and I was pissed when he didn't do that in his second term. I was like, he's gonna do this, he's gonna do that. He's just waiting for his second term, and then he didn't do any of that shit. All right, what do we got here? Oh, now I'm pissed off. I missed a lot of money on that push up. So this push right here, I lost. Well, not lost, but didn't. This push right here was a big pay. I missed that trade. Got out too early. Come on down, baby. Come on down to Captain Jim James used car lot, baby. Come on down to Captain Jim James used car lot down here, please. Come on down to Captain Jim James used car lot. Come on down there, please, for just a second, so I don't have to chase this stupid shit up to the top. It's not gonna let me. Look at that big red fucking bar right there. It's like, fuck you, Captain. All right, what else we got going on here? I got to check back in. I'm getting in trouble. No, I'm not fighting it. I'm just trying to buy dips. I'm riding it the whole way up, dude. I've been making stupid money, Chase. It's been fucking phenomenal. As a matter of fact, dude, Chase, are you ready for this, dog? I got a fucking ratio spread on for June, and I got fucking calls from 446, brother. 446 C's for June. I'm going to cut those fuckers loose up there and then ride those fucking puts all the way down into the middle of summer, wherever the fuck I can get rid of them. It's going to be fucking phenomenal. Oh, you got another chase right here, man. They're going to run this fucker up. Trust me. Or not trust me, but they're going to try to run this fucker up. So that you got more. You can just jump. Make sure they're in the money. Or call spreads. You can run out a call spread expiring in the money for today or for tomorrow and then close them out by the close. Maybe you make scrape up a few bucks or something. If I jump back on, Chase, I'll let you know. Yeah, I'm reading what you're saying, Chase, brother. I got to go back to work, but I'm going to read what you're saying.
Early market on close imbalance currently sitting at 280 million to the sell side.
Come on down to Captain Jim's used car lot, please. Burn all those calls so I can buy a dip. I got a stink bid in right now, but I'm hoping that it'll draw price of options down. I'll be honest, I got a stink bid in, and I doubt they're going to fill me. But, slam the buy button. But much lower. I'll take your 463s for 50 cents. Can I have 1,000 pack of those, please? Bring price down to me, please. Okay, I'll put it up. I'll put it up a little bit louder. Hold on here. There's the news feed. All right, I'll put the other thing back on for you, too. I got to go back to work.
Capital business. We sold our Marcus lending platform. We sold approximately $10 billion.
No, it's a virtual microphone. You can put it right on your, yep. You can even hold it if you want.
Okay. We sold $10 billion of real estate.
Yeah.
And we've taken about $1 billion of operating expense out of the firm, which gives us flexibility to invest back into our talent, into our people. So we've accomplished a lot this year. It's clearly been a transition year, and we've got a lot in front of us in 24 and 25 that we're very excited about.
Yeah, I mean, you've been overhauling your asset and wealth management businesses. You know what? I'm gonna help you out, and I don't care that it's live TV because we're gonna do it anyway to make sure it works out the right way. How about that? How about that? There you go.
All right, thank you, Scott.
Yeah, I mean, you've been overhauling your asset and wealth management businesses. You've seen, several people leave on that front. Do you expect more top-level talent to move on?
No, I think we've got a strong leadership team at the top of the firm. It doesn't mean that there won't be people leaving. There are always people leaving at Goldman Sachs. It's part of the process of our next generation leadership rising, into new positions. Our asset and wealth management business has gone through a significant amount of transition. If you think about what we've done there, we've merged internally 4 different businesses into one integrated platform. So you can almost think about it as having done 4 mergers, in essence. There's a lot of integration in the context of doing that. So there are going to be changes anytime you do something like that, whether it's an internal set of mergers or an external set of mergers. We've got a great team on the field. The business is performing. We will have raised $60 or so billion of alternative assets on that platform this year. Our management fee target of $2 billion of alternatives will be hit this year. We're close to our $10 billion target overall. Our wealth management business is going to grow high single digits this year. Businesses are really performing. We've had an excellent year. I know there's a lot of focus and inquiry in the press around people leaving, coming and going, but the business is actually performing well, and our team is extremely motivated to drive that franchise forward.
Do you feel like the firm is right-sized now? No more layoffs we should expect from what was already announced?
We reduced our headcount about 3,000 people this year.
That was the largest since the financial crisis.
That was necessary. Right? Like a lot of companies, I think a lot of clients that I talked to were adding a lot of heads. During the COVID period and into that recovery period. And I think everybody needed to kind of rationalize what they had done. We're no different. I feel very good about our headcount right now. I think we're in a good place. We can grow from here in a measured way, obviously dependent on how the economy does and how the marketplace does. But I feel very good about where we're sized right now.
What about you? You happy? You can be there for a while?
I'm happy. I'm looking forward. I'm very interested in 2024 for Goldman Sachs. I think we've got a real opportunity in front of us, and I intend to be very focused on helping us deliver on it.
All right, I appreciate you spending time with me here on Closing Bell. Thank you.
Good to be with you. Thanks.
Yep, that's Goldman's John Waldron joining us right here at Post 9. We do everything. We have conversations. We fix microphones. We do whatever we have to do. Up next, forecasting the Fed. T-Row Sebastian Page is back. We'll find out what he's expecting from Chair Powell tomorrow, how he's navigating the market as well as we round out the year right after the break.
Come on down to Captain Jim's used car lot. Come on down here and see Captain Jim at the used car lot. Come on down here. Come on down. Come on down.
According to Nikkei, the Japanese government plans to offer 10 years of tax incentives to promote mass production in areas including electric vehicles and semiconductor devices.
Let me see from my side here. What's too loud right now? Is it the CNBC that's too loud, or is it my voice? I might have been messing with the mixer earlier. Is it my voice, or is it the News Squawker or CNBC? Name it. CNBC, News Squawker, or my voice. Any of them work. Come on down to Captain Jim's used car lot.
Stocks are higher today as investors react to the latest CPI report ahead of tomorrow's policy announcement from the Fed. Joining me now to discuss, Sebastian Page, the Chief Investment Officer.
Remember that the half-hour trigger is down here. You want to see this get bought? If not, we go all the way down there and all the way down below.
Let's talk in stages from reluctant bear to neutral on stocks. Now, where are you today?
So we're still neutral on stocks. And I've been watching your lunchtime show and your conversation with Liz Ann and Adam earlier. And, you know, it's all about those long and variable lags. You have to worry about those. And that's keeping us from going all the way
according to Nikkei, in Japan, for semiconductors, businesses will receive up to a 20% break on corporate income tax
the big mattress of money that's cushioning the economy into this landing here. Tells us that things should be okay, and the
An
Fed
early market
is,
on close imbalance still
rates.
sitting at 280
what makes
million
you
to
think
the sell
that the lag
side.
effects are still going to have an effect? Like maybe what the Fed's done has already had rolling impacts, so you're not going to have the big effect that the more cautious market observers seem to think is still to come.
The bleeding edge of news for non-farm
Look,
payrolls.
I expect
Then
a
sign up
soft
today
landing,
and get our special
but I think the
offer,
risk
Financial Use
there
Pro,
is,
for a year's worth of
look
our
at, for
service
example,
for the price of
credit
1
card
month.
debt,
That's
or
at
look at weak
92%.
companies that need to roll their debt into much higher interest rates, or look at commercial real estate. So there's still fragilities, and again, it feels comfortable at neutral. It's kind of the return of the balanced approach. We're going to get some volatility on growth, but most of the volatility.
And in Japan, the size of the tax breaks will be proportional to production and sales volumes of qualifying products.
Just a heads up that there's 421,000 on 463s. They're now they've bled down to 80 cents. If I can get 50 or close, I'm probably being a little bit too greedy here, but this might be a place of interest to begin a position long and build on that position to the upside.
By the time you get, you know, overweight or whatever language you would use to describe a more positive view, the market would have gotten just further away from you, no?
Yeah, and look, Scott, here's a different way in which we're positive. We're actually long small and mid caps under the hood,
you might do better right
duration,
now trading
credit,
futures, by the way. Just a heads up, you might do better trading futures right now.
Risk positions where relative valuations are more attractive. So you keep it neutral on top, but under the hood, you could
Check
add
one.
some
Check some weird
octane
shit going on
in
the
there,
microphone.
and
Check,
just
check, check, check,
recognize
check,
that
check,
this is
check,
kind
check,
of a
check.
balanced outlook.
It's got to be
Scott,
my mixer,
bottom line
man.
is a
Something's
lot of
going
it
on in
is
the background. I
priced
can
in.
tell.
You know, in November, we just had the record easing in financial conditions, the largest 1 month easing in financial conditions in November. The dollar pulled back, equities rallied, spreads compressed, rates came down. I'm not sure that's what the Fed wanted, Scott.
We'll see. We'll see, and I guess we'll hear from the chair himself tomorrow, and we can't wait for that. Sebastian, thank you. I appreciate it. Sebastian Page, once again, joining us on Closing Bell. Up next, we're tracking the biggest movers into the close. Christina Partsenevelos is with us, as always. With that, Christina.
Well, we've got two companies and two sudden C-suite departures, and that's rocking their share prices. I'll reveal the company names next.
Early markets on close imbalance now sitting at 362 million to the sell side.
Where's Trader Podcast? He wants to hear the magic number, doesn't he? Wants to hear that magic number. Anybody getting long? There's a question inside the stream right now. Is anybody getting long in the overnight? Anyone getting long into the overnight? No, please. We are going to the JPM caller. We are going to the JPM caller. we are going to the JPM caller. Please don't say that. T-Rent 10, please don't say that. Please don't say that. We're going to the JPM caller whether we are above it or below it, brother. It doesn't matter. They want me to buy this shit for 85 cents, and I'm like, ugh. Like 464s I don't want to buy. Oh, they'll zero those fuckers out. You have to be closer in the money, like 2 or 3 strikes. I'm going to pay $1 or $2 to trade this, and I don't want to.
Christina Partsinevelos joins us once again.
I trade a call spread here though for the
let's start with
close.
Lucid Group under pressure after announcing the abrupt exit.
You can only own that shit for like 15 minutes
it's already
though.
searching for a replacement CFO, and that its vice president of accounting will fill in the role for the time being. And that's
Remember
why
your rules here. You still want to see price break above,
also
come
in the
back
red
down,
after a sudden executive
and
exit.
go like
Its
that.
chief
Okay,
commercial
don't forget your
officer stepping
rules
down
over
after
here.
less than 2 years.
So if you're
going
to try to buy a
the
dip,
company says
you
it's
mute this
increasing
here.
its focus on vaccine sales, which will now be overseen by its CEO. Those shares down 50% this year, trading 5.
There's a really good trade by the way in medicals equipment. If any of you guys are trying to buy healthcare stocks, there's a better healthcare trade out there for next year if they do cut rates. So right here, right? This looks like the dip right here. Still haven't touched this though. And we haven't broken above the white line, right? So what you're looking for here to take this long for the next level is you're looking for price to come up. I'd really like to see it tag right about there. Come back down, and then execute the call trade right here. And that's where you'll get your big push up to the upside. So be very savvy here. If you are going to buy calls, make sure they're at least in the money, if not deep in the, not deep, but 92, 97, or a 99 delta call. Just watch this interplay right here. You want to see the reason you're watching for this right here, if you don't know why. It's for a bunch of reasons. One, you want to test the strength of bulls. Like, are the buyers still there? Yes or no? You don't want to get caught in a liquidation break, and then that was the actual dip buy, right? You guys always hear liquidation break, and then they actually move it up. So you want to see this. You want to see if the buyers are actually here. Or you could do, there's some other stuff you can do. You buy the dip right now, and then you put some stops under here. And if they trap you, you'll probably be given a chance to get out. There's a couple of different ways to trade this, but I like to see us at least get above this. I want this tick. I want to be above this this white bar right here. You want the safe trade so you don't get ate up in you don't want to get eaten up in burn on the premium on these calls because we only got a few minutes left. Let me know if you're gonna trade this up into the close inside the comments here. I still haven't bottom. 2 Point saying close puts 7,000 probably should have stayed, but have to be safe. Close puts. What else? Bulls make money. Bears make money. Pigs don't. 2 2 points pissed off. Oh, puts are printing right now, right on.
Market on close imbalance, 2.3 billion to the sell side.
There goes the liquidation break right here. Whoa, how many billion was that? Trader Podcast, you listen? Did they just say 2 billion? Did they just say 2 billion? Did they say 2 billion or 2 million? They say 2 billion or no? Did you guys hear that? 2 billion? Was it billion or million? B as in Bravo or M as in million? Mike or Bravo? I thought they heard B. Bravo, I thought the same thing. That's very bullish, by the way, if you don't know it. Trader Podcast can explain it. If you buy the close, right,
Eastern
you should
time, we get
grab
South
a
Korean export price year on year. Prior,
a 0.30 delta for Friday. It should print.
And South Korean import price year on year. Prior minus 10.2%.
I would probably go with Monday, but yeah, 30 delta call for like a month. I wouldn't do. You could do Friday. The only specific to this week thing I would say to you would be that you're going to get a repricing of options regardless tomorrow. Unless you're in a spread, you are going to get a repricing. So if you're looking to place trades that you're going to hold longer than tomorrow, I would highly recommend waiting until that IV crush. Yeah, 2 billion to the sell side is an indicator of a 30 delta. Typically, without this event, 30 delta call on a weekly, printing at a high rate. Yeah, more than 2 billion. You're looking for like 2 billion, I believe. What's going on, Nino, baby? What's cracking? Lane Meyer. Spy finally found the Coke drawer. Nice. So 30 delta calls with some time on them. Trader Podcast just jumped in the stream. He said 2.3 billion to the sell side. You need to buy 30 delta calls with some time on them. So there you go. They do a pretty good job of printing. Even if we roll down, let's say we roll down tomorrow, you still want to hold them into until they print. And may possibly add to them, but don't just be giving them up. Almost there. Do 4637. Damn, fucking Jenny Marcus almost nailed it. 463730. Fucking almost within a C here. Oh. They're
At 4
teasing me
p.m.
again. They're
Eastern time, we
teasing
get
me here.
South Korean export price year-on-year, prior -9.5%, and South Korean import price year-on-year, prior -10.2%.
Here, I'll post that for you right now.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
One minute remaining. I'll lead with the South Korean export price year-on-year. minus 7.2%, minus 7.2%. Import price year on year, minus 8.5%, minus 8.5%.
Dude, look at this right now, man. They are. Holy shit, they're $1.18. I missed the trade making that post on Twitter. Fuck me. Here we go. Should I put some jams on up here or no? Do me a solid out there if you're following right now. Let me see what we got. How many watches we got here? I posted it on. I gave you credit on Twitter too, Trader Podcast. Just heads up. I did post it as well for you, brother. Look at him coming right into this right now. No, it's just with selling.
Unofficially, the S&P 500 registers the highest closing level since January
every
14th,
fucking day.
2022.
What fucking part? That's it. Banhammer's coming out for these fucks. I got a bunch of bots in here. Got a bunch of bots inside my my fucking feed right now. Fucking crazy fucking people. Squeeze it up, baby.
The S&P 500 Infotech Sector Index rises at 0.8% to a record high close.
Do you know what the best part of you know what the best part of this is? You know what the best part of this is? You know what the best part of you know what the best part of what I do is? You want to know the truth? I don't make any fucking deals out there with these companies. So like I'm not like out here pushing. Matter of fact, I used to push Tasty, and I don't even have an affiliate with them. I've never tried to make money off of an affiliate with Tasty Trade. It's like kind of bizarre. So it's bizarre. All these companies, I don't make a goddamn dollar. So I'm fucking free to say whatever the fuck I want. What's going on, Steve? Yeah, there's some good Steve M1, bro. We've got some. So Steve, we put the $5. We put the $5 chat fee in because we were getting a bunch of counter alpha. And then once we started charging the $5, dude, like just quality out, generally speaking, quality alpha all day long, man. It's a gold mine. And just, Steve, just figure out who the people that you like in here and just talk to them, start chatting them up. Yeah, fuck yeah, Smiley. I was talking about that the other day. I don't fucking owe any of these companies out there a goddamn thing. I can be honest whenever the fuck I want. Fucking thinking I'll suck me. Well, I guess they can't really suck me, but like I really like some of these companies. Like I love fucking Bookmap. I think for free charts, Webull is great. I got like 3 or 4 people on Twitter that are like, they're the best customer service ever at Tasty. I agree with that. They get the best customer service ever. Someone else said, well, of course they have to sell order flow. I'm like, I'm fine with that too. I got no problem with selling order flow. They're like, oh, they're like diverting from the point that I'm trying to make, which is that they were selling order flow. Now I have noticed, like if you've got the hey, shave off 2 penny button, it's now shave off 3 to 5 cents, right? So like, let's see, turn the dial on how much you're gonna shave. It's high. It's fucking high right now. I don't know why it's high. I don't know what they're doing. I've got video of it on my fucking platform. So it's not like I'm just blowing smoke on my ass. I'm not the only person experiencing this. So I mean, I'm gonna call it out where it is. Tasty is a great platform, but that order flow will eat you alive trading 0 dates. Like literally eat you alive. 2, 3, 4, 5 pennies plus a reversal because they already know it's reversing. It's a whole other fucking story. Now you're talking 5, 6, 7, 8, 9, 10 pennies, and you're still directionally going the right direction. Just a scam, man. That's all it is. Yeah, dude. I don't want to talk about it on the stream. Yeah, that's fine. You guys want to see me on the stream? Yeah. No, I've been trading with Tasty. So like Tasty is great. I can call Tasty for a spread and get the price that I want. Like they're excellent. I've got no problem with them. I got a problem with the fucking order. Like the order flow selling is cranking right now. I can't see what some of you guys are saying right now. Some of you guys are talking the stream. Yeah, I think you can, Steve, M1, I think you can hit like heart buttons and stuff like that. I think the closing fills on spreads. I think the closing fills on spreads on Robinhood are brutal. I'm not a fan of them. I hope that Robinhood can turn into a great platform for new traders. I have a Robinhood account. I have traded on with them before. I had a problem with them too. I had a brokerage broken into once from them. They covered it. They protected it. Oh yeah, look at that. Oh yeah, Thurston Howell. What's going on? Good to trade with you guys today, baby. Good to see you. Primal's back. Good to see you. See if we can get down here for that nice little pullback right here we talked about earlier. It's trying right now. Slide it over here so you guys can get the room to see it to the upside. Those 463s they were 81 cents. They're now trading $1.35 right now. Yeah, you never want to get the improve. I got to say something. That post I made about Tasty, sometimes when companies are doing this, you got to call them out.
Just taking a look at the market wrap for today's
You
session.
have to call them out because they will ask. They will start an investigation. They'll find out. Or they'll say,
inflation data
yeah, we're doing that.
reinforcing
Fuck that guy.
speculation, policymakers will be in no rush to claim victory just yet. While markets continued to bet officials will be on hold Wednesday, the latest figures bring into question the aggressive pricing of a dovish pivot. Traders have slightly trimmed their wagers on rate cuts in 2024, with the first one still projected to happen in May. The
Dude,
data
come on,
also
trader.
spurred speculation that Powell
You
will
ready, Trader
try to throw
Podcast?
cold water on the Fed easing buoyancy. Following the last Fed decision, Powell reminded
fade me, are
investors
you?
that inflation progress will come in lumps and be bumpy. The fact that Tuesday's
Let me move
consumer
this stuff
price
over.
index was roughly in line with estimates and ticked up a bit underscored the
You guys
choppy
aren't
nature
fucking
of
fading
getting
me out
prices
there, are you?
back
You know,
to the
you know how
2%
badly that goes
target,
most of the time,
especially
right?
in the service sector, which the Fed has zoned in on as the last mile in its inflation fight. After whipsawing in the immediate aftermath of the report, 2-year yields steadied above 4.7%. Long-term treasuries swung to a small gain, and after solid demand in a $21 billion sale of 30-year bonds, the S&P 500 eked out a mild advance to the highest since January 2022. Wall Street's fear gauge, the VIX, slid toward
Look
a
at that
4-year
iceberg
low.
right there. Woof. Look at that iceberg. Look at that big fat red bar right there, just creepy crawling over it. Woohoo! Yeah, and I worded the post correctly for you there, Trader Podcast. Billion, baby. Billion. So if you're in YouTube, I made a post. Trader Podcast provided a paper that I think is 10 years old. If you want to read it, I pinned it to my profile. You can grab it there if you want. Read through the entire thing. And then if you have questions for Trader Podcast, you can always ask them inside the stream chat. Come on, baby. Keep on squeezing. We're close here, guys. I'm going to make this orange bar down here tighter. Right there. That doesn't mean we go there, but I'm going to tighten it up a little bit so give you guys see where that breathing room is. Look at that move up, dude. Just cranking. Oh, we're done with the options now. 3 minutes, closed, done. Did any of you guys stay long into 4:15? Let me know. Did anybody stay long until like 4:15 p.m.? Did you get that or no? Oh yeah, the Rut Micro is awesome, by the way. Look at that hanging dong up there. All right, I'll see you guys tomorrow, 9:30 in the morning. See you then for the rate decision. I'm trying to read. You guys are blowing up the stream right now. I'm missing what you're saying there, Trader Podcast. I'll give you a shout. Later, brother. Bye. Did you guys close it right on the fucking pin, right? Right on the 4:15? Later.